So, folks, there's basically only one story this morning, which is tariffs, reciprocal tariffs on the rest of the world. U.S. President Donald Trump announcing universal baseline tariffs of 10% on all of America's trading partners just hours ago, plus higher reciprocal tariffs on a long list of countries. We'll have details in just a little bit. But first, though, take a look at reaction in futures again. They're calling for a pretty rough start when Wall Street gets back up running tonight, Asia time. We'll sift the charts and give viewers a look. The Dow is called down by about 1,000 points last I checked. Which should be what they're showing now. That's right, down 995 as we speak. And gold is going in the opposite direction. Just moments ago, in fact, we hit a fresh record high, yet another one. I've kind of lost count. I think we're up to the 17th or 18th record high so far this year, and it's only April. We're at 31.65, went as high as 31.65 just moments ago. And oil shaping up like this. Let's get your front month NYMEX first. It is at 69.41, down more than 3%. And down by roughly the same quantum also is the global benchmark Brent, which is at 72.63. And slower in Bitcoin. Get your look at cryptos. Also under pressure. BTC is at 82,445 a coin, which is down more than 3%. So on to the tariffs. President Trump singling out unfair trade practices in Asia's auto sector, among others. Here is some of what he had to say at an event at the Rose Garden just a couple hours ago. Take a look.
81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that friend and foe. And in many cases, the friend is worse than the foe in terms of trade. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles.
So what we're talking about here is not just the reciprocal tariffs, but now the tariffs on autos of 25%, which kick in a day later, which is April the 3rd, which obviously we'll be following and talking about tomorrow morning Asia time. So far today, the markets in Australia have been up and running for about an hour, and things are not looking good down there. We're off about 1 3/4% on the S&P ASX 200. The big markets, Korea and Japan, about 4 minutes into Thursday trade, are also off very sharply. The Kospi and Seoul is down 2 1/4. The Nikkei 225 is off 3 1/3%. Let's break it down. Jerry Kang is watching reaction in South Korean markets. Lynn is on Japan. Lynn, you go first.
Yeah, good morning to you, Martin. We are seeing that significant downside playing through in the opening minutes, and I'm expecting it to get far worse because a lot of the companies are still untraded at the moment, keeping in mind that futures will pointing to a close to 6% fall for the Nikkei 225, which is already in correction territory as well. 24% is the rate in terms of the reciprocal tariff on Japan. It's an extremely turbulent time. So when we look at those risk assets, it is certainly a risk-off sentiment. We've seen this significant strengthening in the yen as a haven bid, and we've seen that in the Swiss franc as well this morning. JGBs are also getting bid. The benchmark 10-year yield has fallen by about 11 basis points as well this morning. And then, of course, a big sell-off in the equity space as well. Looking through the sectors, I mean, it's all red arrows, of course, but certainly a couple of sectors worth noting here. The transportation index is lower by 3.7% at the moment, keeping in mind that that announcement, of course, was a reiteration. We already knew about this 25% on the autos. I'm also watching some of the other top sectors, export sectors for Japan, like, for example, your electronics. That sector down close to 3.8%. Machinery is another key index here, down by about 3.5%. Keeping in mind that some of those sectors at the moment are unaffected, pharma, chips and so forth. But that's not because they are going to be exempt of tariffs. The expectation is that the Trump administration will be announcing separate numbers on those coming up as well. Now, as Mizuho has noted as well this morning in a note, that what happens next in terms of Japanese assets will very much depend on what the reaction will be from the Japanese government. And I'm just seeing some flashes here. Apologies. Those were in relation to South Korea. So that is a good segue to get to Sherry Kang for a reaction in terms of South Korean markets.
Yeah, so let me pick up on those flashes that you wanted to mention. South Korea's finance minister saying that he will make efforts to negotiate with the United States, which has been, by the way, difficult given the leadership vacuum in South Korea, and also saying that he will prepare a response strategy to minimize negative impact from U.S. tariffs. I do have to point out that these are lines that we've already got over the last few weeks or so. And of course, this is just yet another reiteration of how South Korean government wants to support some of the sectors that will be hit. By the way, acting President Han Duck-soo did say earlier this morning that emergency support measures for businesses that will be impacted by U.S. tariffs will be put together. So let's take a look at how the market is reacting. So I know that it's early minutes. I mean, we've got only, just 7 minutes into the trade, but the Kospi is down more than 2%, but it is coming off the morning lows of this morning. So we'll see how the rest of the session go. And volume is quite low. So I would imagine that this is not very much of a risk-off kind of selling, but it's sort of a hesitant, trying to figure out, doing the calculations and punching in the numbers and how the South Korean government comes out with its responses. I think that's what investors and traders are looking for. In terms of the consensus, digesting the 25% tariffs across the board for South Korea's case, it is higher than expected, and it definitely throws the Korea-U.S. Free Trade Agreement out the window. Let's take a look at the sectorial setup, and obviously we kick off with the autos because it was something that was mentioned by U.S. President Donald Trump just this morning. He's basically calling for more access of American U.S.-made cars into South Korean market. We understand that has been really his one of the calling points for South Korea during the first administration, during the first Trump administration, and also just a couple of days ago in the USTR report as well. We've got red pretty much across the board, and Hyundai Motor, in fact, I just actually missed that price point, but yes, so there we go. So Hyundai Motor down more than 3%. I would imagine that the damage is harder, bigger for the auto parts makers because of lack of localization in the United States for these smaller companies. This is something that was pointed out by Macquarie's James Hong this morning. And let's take a look at some of the other sectors, major exporters in South Korea, semi-stocks, batteries, and refined petroleums. Those are, along with the autos, are the top export items from South Korea to the United States, and we do see some negative price action. However, there are some sectors that are bucking the trend of this morning, guys, and that is defense and shipbuilders. I think the market is clearly sending the signal that these are really the sectors that could be used as part of their negotiation for the South Korean government in terms of getting the tariffs level down or getting some kind of carve out. We'll see.
Okay, this is interesting. It's a good point you brought up, Sherry, especially when you talked about volumes being lower or thinner than normal. And, I want to take a step back and take a look at where we are. The announcement is out, right? But again, this is just the beginning. We've only just begun. We don't know whether or not this is going to escalate, whether or not there's going to be retaliation or countermeasures or negotiation, carve-outs, etc., right? And that is, I think, reflected in these lower volumes. It means that a lot of investors are still sidelined, waiting to see how things play out before they actually commit. And the sell-down we've seen already, right, in just the last month and a bit or so, in the S&P, in the NASDAQ, in the Mag 7, in Japanese stocks, for that matter, Lin. reflect exactly the same thing. They've been on much lower volumes, lower than average volumes, suggesting that money is sitting this out. And when we do have lower volumes, I need to get it out there, it always tends to skew or exaggerate price moves. It can also obviously make things a lot more volatile as well.
Indeed.
And of course, I think...
Yeah, go ahead, girls. Lynn, go ahead.
So we're seeing, in the opening minutes here, Nikkei 225, 4% lower, and already that index in correction territory. And as you say, there is so much policy uncertainty, right? It has been for quite some time now since the US President Donald Trump took office here. So perhaps there is some of that sitting on the sidelines to assess, because there are still so many questions. I've reached out to a number of analysts today, and they say to me, we're still trying to work out what will be the ramifications of these numbers, because it's not just the fact that there is a 24% on Japan, but also the broader impact of these other tariffs on these other countries, and also that baseline 10% as well. But as far as, what we are watching here now going forward, it really is going to be, what is Japan's response here? And I've been speaking to a couple of analysts this morning, and their view is that still, when it comes to Tokyo, could be more mollification rather than retaliation here, because they want to particularly try and get some of those exemptions in terms of those auto tariffs, the 25%, just because of how important it is on Japan's export sector, but also economy as well. And, of course, implications for the Bank of Japan.
Yeah, and Sherry, I want to talk to us a little bit more about... no, go ahead, Sherry.
Yeah, no, I want to point out two things here. Many are talking about, and quite surprised perhaps, by the fact that Canada and Mexico didn't come up on today's list. Perhaps that clearly shows that, because these were really the two countries that President Trump came out in initial days hard with aggressive tariff threats and the tariffs in place at the moment. So I would imagine that they're looking at these two countries as examples of potential negotiations down the road. For South Korea, I think it's also interesting that the White House actually came out with an additional press release just this morning, coinciding the Rose Garden event, talking about how there is no additional tariffs on sectors like autos, steel, and semiconductors. So basically saying that we're okay with the auto tariffs that we already announced and that are set to go. So they're not really breaking things here, but they're just laying it out how they are discontent with some of the trade practices for each country. So sure, it will take time for these negotiations to go through, and we see modifications and adjustments. But I think that's where the market could be seeing this as a buying opportunity. We'll see how things go. I mean, I think today could be a good case in point in terms of how the market is going to take this for, I don't know, for days and weeks to come.
Absolutely. We'll be watching. All right, great stuff, guys. Thank you, Sherry Kang and Lynn there. As we tail into break, take a look at the damage in Japanese auto stocks so far this morning. There's a look at the key names. Toyota's down close to 5%. Nissan down roughly the same quantum. Honda down about 4.5%. We're back in 2.
CNBC. Live ambitiously.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. bitter.
I think it's quite hard to the foreigner to imagine what they have in Cam Tam. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you feasting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. cnbc.com/technology.
Welcome back. It is a Tariff Thursday here on Squawk Asia. Focusing on China, one of the countries hit hardest by President Trump's reciprocal tariffs announced this morning. Emily Chantan, up to 54%.
Yeah, that's right, Martin. And it's also worth noting that it was at the top of that chart that President Trump was holding, outlining all the numbers and, of course, the percentages for the various countries that have been hit by what he's calling tough love. I have great respect for Xi Jinping, he says, but they were taking tremendous advantage. And he's talking about the new reciprocal tariff that he's imposing on China amounting to 34% that will go into effect on April the 9th. And that is on top of what the CNBC has confirmed with the White House on February the 4th. 10% was imposed, an additional 10% on March the 3rd. And then with this latest number 34, that brings to 54%. Now, what we also know and expect is that the de minimis exemption, that is on those parcels or low costing parcels, anything less than $800 that had been exempted, and that now has ended as an executive order has been signed also today. That will go into effect on May the 2nd. What we are waiting out for is a response from China. What we know from Liu Pengyu, this is the spokesperson for the Chinese embassy in Washington, China's opposition to the imposition of additional tariffs has always been consistent and clear. And what we have seen is that China is the only country that has had no carve-outs, no delays, and covers 100% of Chinese goods. So we are watching, of course, for the reaction, the potential retaliation to come through from China. And, of course, the market reaction here. I did get a chance to talk to some traders, and what they're expecting in the markets today is that, A, the national team will be on alert. China would have been ready for what we could expect in terms of the reaction in the markets and any retaliatory tariffs or as well as comments that could come through from China. In terms of the Hong Kong market, we could see a trigger of short-term profit taking, and this will hit the H shares. This is the Hong Kong Hang Seng Index, China Enterprise Index, as well as the tech plays in the Hong Kong market. Those have seen strong run-ups, and we may see profit taking hitting the market today. As we talk about all the tariffs, Taiwan was also included, and there will be no reaction in the market today because Taiwan markets are shut today and tomorrow, and this is to mark Children's Day there. Taiwan has been slapped with a 32%, and what we know is in terms of the Dirty 15, as they're calling it over in the United States White House, Taiwan has had a rising trade surplus with the United States. It has jumped 7-fold. Since 2017, that trade surplus was $8.4 billion, and just last year, it amounted to $64.9 billion, and Taiwan now is the 7th largest trading partner with the United States. This is what President Trump had to say about Taiwan.
Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. Actually, they're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them.
And so we have been watching in the lead up to today the response from Taiwan. Remember, President Trump had accused or alleged that Taiwan had stolen their semiconductor industry. And we have since seen the likes of TSMC allocate $100 billion in additional investment on top of the $64 billion that they've already committed in terms of building out factories there. They're not going to be including a new R&D center in Phoenix, Arizona as well. So we are going to be watching, since now we have the numbers for particular countries, but now also whether or not he's going to be identifying and targeting sectors. So we are going to be watching out for that. And again, the Taiwan market is shut today, so we won't see any reaction, Martin, until Monday.
And I got to say, I wonder if some people missed this, right? And you were talking about Taiwan. President Trump actually listed Taiwan as a country. Not sure whether he misspoke, it was mislabeled or what, but that kind of, I guess it could come across as a faux pas, right? It's probably going to get China's back up pretty significantly, wouldn't you think?
Yeah, that's right, Martin, and that's going to be giving China another reason to be angry. If we do have that chart that President Trump was holding, you could see that he listed the countries out. China is on top, and then Taiwan was also included actually amongst the top four. This did elicit a response from the Chinese ambassador to the United States, and he posted a very stern reminder. This is Ambassador Xie Feng. He was saying that Taiwan is China's Taiwan. We will continue to strive for peaceful reunification with the greatest sincerity and the utmost effort, but we will never allow any room for Taiwan independence, forces in whatever form. So the ambassador didn't comment on the new tariff rates itself, but about it being included in this list of countries. So we are waiting out for a response from China, what they will have to say about, of course, the tariffs, the new reciprocal tariffs, and if they will respond officially about Taiwan being included in this list as well. But we did hear from the U.S. ambassador, I should say the Chinese ambassador to the United States, and they, of course, issuing a stern warning about that. Martin, it's back to you.
Okay. All right. Thank you. And we'll be watching for more fallout from that country apparent faux pas by the president. Also, market reaction when Taiwan gets back up and running tomorrow. But I wouldn't be surprised if the NT Taiwan dollar is under a bit of pressure right now. Thank you, Emily Chantan there. All right, bringing Tony Raza, head of multi-asset strategy at UOB Asset Management, joining us live now. Tony, great to see you. What do you make of the events of this morning, Asia time?
Yeah, so these are worse than our worst case assumptions, right? We had sort of laid out a plan in terms of the scope of the reciprocal tariffs, the flexibility, and the timing. And I would have said clearly on the scope of what they've included in these tariffs is far worse than we were expecting. Just to throw out some numbers, if we were looking at Europe, for example, we were assuming that if you matched up what the protectionist tariffs Europe has, you'd come up with a number like 3% for Europe. And on that table that Trump came up with, he had it at 39%. So whatever scope they were thinking in terms of adding in various trade barriers and VATs, they've gone as wide as possible. They've come up with the most extreme numbers that we can't even comprehend how they're coming up with these. And then in terms of timing, I think, we were hopeful that maybe this would be something that'd be rolled out over the course of a year that would allow like time for negotiations or whatever. But it does seem like the timing is much more immediate and is, again, worse than, our sort of worst case type scenario. In terms of flexibility, I guess we just don't know. Maybe this is all meant to be negotiated, but it's so complex and so far-reaching that it seems like negotiations would be complicated and take time at the very least. So
I was going to say,
I think we're concerned about what we're seeing.
Yeah, it's kind of a layer cake, right? Which makes it, there's a lot to get through. And I mean, best case had been before the announcement. I think some folks were saying, look, just give us one number, a flat number, and even if it gets negotiated, at least it's probably easier to work with. But in this case, you've got baseline, you've got country, you've got industry. So I would agree, probably the worst possible outcome. Tony, I'm curious, how is this changing how you're positioning right now?
Yeah, so we had already downgraded last month on the nature of these tariffs and the impact that we were already seeing in the economy. At the start of the year, we were really optimistic. The global economy looked like it was in really good shape. We'd survived the period of high interest rates. Interest rates were coming down. And, if we had no policy issues, this should have been a really strong year. But we started to get worried, and we neutralized things at the beginning of March. And quite honestly, I'm just into the office now. We're coordinating strategy group meetings, and we're trying to assess, how cautious should we get into this. Obviously, we're very concerned. I would say that, if I was to spin the optimistic side, it's that we do believe that the global economy has a lot of resilience to it. We've seen that in the face of COVID. We've seen that in the face of the inflation spike and the very high interest rates. And we've seen a global economy that's really been able to withstand a lot. And so, I would maybe hold back from being overly alarmist in the sense that I still suspect there's a lot of global resilience out there.
Yeah.
But this is very significant and really profoundly changes our assumptions on what the economic scenario is for this year.
Tony, listen, love to talk to you, but we got to take a break and get paid by advertisers to stay in business. But can you stick around? We'll come back to you after the break.
Happy to.
Okay, excellent. Good stuff. We'll pick it up with Tony Raza right after these words. Don't go away.
CNBC. Live ambitiously.
The top fintech companies list is back. CNBC and Statista are looking for the world's standout firms, following in the footsteps of some of the biggest industry players. To find out more and submit your application, head over to cnbc.com.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fought for them.
I believe in getting justice.
American Greed on CNBC.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, and I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Welcome back. It is a Tariff Thursday here on Squawka Asia. Time check 8:30 a.m. Hong Kong, Singapore time. 60 minutes to go before markets in China and also Hong Kong join trade and react to President Trump's reciprocal tariffs announced earlier this morning. Markets that are in play in business are shaping up like this in a phrase, not very well. Seeing some significant selling out here in this neck of the woods. Sydney is down 1 2/3%. The big markets, Korea and Japan, are under significant pressure. Kospi is down close to 2%. The Nikkei is off session lows, but still down more than 3% as we speak. Back with Tony Raza, UOB Asset Management. And where we left off, Tony, you were saying you were underweighting U.S. equities. You're overweighting China, and is that right?
Yeah, that's right. They had both been at low levels of growth, and we were seeing evidence of a rebounding growth this year. And for the most part, they seem to be stomaching at least the initial assumptions on what we were seeing as far as tariffs. I do think we have to go and reassess how significant these tariffs are and what they can do on the global scale. I think, increasingly it does look like maybe there's nowhere to hide. The U.S. seems greatly affected, but I'm not really sure. I'm not quite as confident that we're going to be able to find other places in the world that won't have ripple effects there too.
All right. I was going to ask you about gold, but let's talk about fixed income first. That's potentially one of the places where you could hide, and it's probably a good time to take a look and catch up with the U.S. 10. I think it's taken a bit of a knock, at least on the yield, down about 5 basis points or so. We're in the 407s, if I'm not mistaken, or 409. So we have that chart. Give viewers a look. We're up at 412. Oh, goodness. Okay, now we're sub 407. We're at 406 and a change. And Tony, you think that's likely to go lower?
Yeah, so I think those who are buying bonds are having a tough time in sort of assessing what's going to happen at the Fed, right? The growth outlook is definitely under pressure right now, and hence that would put pressure on the Fed to cut rates. But the inflationary outlook is also quite troubling, and therefore, I think that really puts the Fed in a tough position. I can see the way yields are breaking to the lower, and therefore it makes sense being concerned about growth. But I do think there's a limit how low yields can go because ultimately I think the Fed is going to be somewhat constrained. Their initial comments have been that they do look at tariffs as being transitory, which is a dangerous word for them. But also, I think all the more so now that the scope of these tariffs are so large, you have to be concerned about, the ripple effects as prices and everything starts to go up so much. People are going to be demanding more in wages, and then you have this, non-transitory effects into inflation.
Yeah, Tony, while we've been talking, we're also showing folks that the 2-10 spread, that's narrowed significantly as well. We're at about 26, 27 basis points on that. So curve is flattening even further. Not sure whether I'm talking about inversion, backdoor inversion sometime soon or not. But look, in terms of places to hide, given the fact that, even if this was the worst possible outcome, right? It is even worse than that. It's just a starting point, right? Where we go from here, we don't know, but we do know this isn't the end. It's just the beginning. Given that, even with gold at fresh record highs earlier this morning, 31.65, is there more upside, and do you like that as a place to hide?
So directly on gold, I would say, yeah, we still like gold, and all the more so on a day like this with so much confusion. But I would add, I think to carry on to the point you were making, I think is exactly right. I think the markets were hoping for some sort of clearing event where at least we know what the tariffs we're dealing with and businesses can start to plan around it. But I think what's happened now is that I don't think the uncertainty is going to go away. Now what I think economists around the world are going to be looking at is, can the global economy really hold up to this amount of tariffs without creating a recession? And I think at the very least, everybody is increasing their recession odds, even if they aren't making it a base case yet. I would have said at the beginning of the year, I had close to 0% assumption on recession odds. And in-house, we had already raised it to 30%, and that was before today. We may have to raise it a little bit more. But I think the uncertainty hasn't gone away because of this. The uncertainty is going to be profound because we're going to be watching economic data very closely now.
Yeah, because jobs report coming up on Friday as well. That's probably the next key data point. But in terms of watching markets, Tony, we've been talking about how, equity markets, a sell down we've seen, whether it's the S&P, the NASDAQ, the MAX 7, Tokyo stocks, or whatever, it's been on lower than average volume, suggesting that there's a lot of money sitting things out, right, waiting to see what happens on the tariff front, how high the tariffs go, whether they get negotiated down, whether they're countermeasures or retaliation, counter strikes, as it were. So that's maybe not a good sort of indicator to to follow because thin volumes can always skew and exaggerate price moves. Currencies and also yields, are they a much more accurate reflection of the potential risks that could lie ahead?
Yeah, I do look at currencies and yields because, equities can be very volatile. But the fact that, there's been a lot of corroboration of the trends that we've been seeing in especially yields, I think that sort of just, really gives evidence that the concerns about the global economy are really real, and hence we've been seeing big moves. If there's one area that we've been watching that hasn't really been as worried, it has been credit spreads. And I think they've been largely remaining fairly tight. And I think in the next few days will be interesting to see how those behave. I would imagine some pressure on credit spreads at this point. I think the anxiety is being ratcheted up another level.
All right, and as we speak, the 10 is sinking further. The yield on the 10, we're almost at 406 even right now. Listen, Tony, it's been great to talk. Appreciate the time. You keep safe and get to crunching numbers as much as you can. And we'll see you again very soon. Thank you for this morning.
Thanks.
Tony Raza there from UOB Asset Management joining us live. Right, as we tail into a break, I want to show you what's going on in currencies. We were just talking about that with Tony. DXY, top left-hand corner of our beautiful wall, continues to sink. We are at 103.36 on this heavily euro-denominated basket of half a dozen currencies. We've got dollar yen as well. It is now at 148.10. Didn't mean to scare you there. So dollar is taking a significant knock against the Japanese currency. We'll take a quick break. We are back in 2.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
Welcome to my apartment in Paris.
She's living in the city of her dreams, but the big move was far from easy. South of the border living, where everything is cheaper.
Welcome to my apartment in Mazatlan, Mexico.
Follow a digital nomad to Croatia.
I moved to Croatia from New Jersey. I live on $47 a day here.
And unlocking Lisbon, where a family spent $500 million on a new 400-year-old home.
Welcome to our apartment in Lisbon, Portugal.
Catch it all on Unlocked.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
Welcome back. It is a Tariff Thursday here on Squawk Asia, and we've got Asian equities selling off right now so far this morning. But I have to say they picked up off lows. Tokyo, for example, at one stage was off 4%. Now we're down only 3, if that helps. Let's take a look at markets in Southeast Asia, how they are likely to react when they open up a little later this morning on a rolling basis. Of course, as always, top of the hour. Let's help us look ahead. JP Ong is on the case. Good morning.
Good morning. Of course, we're going to see Singapore and Malaysia first up on the chopping block, for lack of a better term, at 9 o'clock. When these markets actually come online, we're already seeing a divergence, though, with regards to their currencies at the moment. We're seeing the Singapore dollar just looking a little bit firmer, actually, in today's session, while The Malaysian ringgit now weakening to its softest levels actually about 2 months. We've talked about the Singapore dollar's role as an emerging quasi-safe haven trade for some investors actually, and perhaps that's actually playing into why you're seeing a little bit of strength. But really the markets to watch out for are probably going to come on at around 10:30 Singapore time with Vietnam. We saw the Van Eck ETF a while ago that tracks Vietnam stocks falling by about 10.6%. Now we have to remember these are foreign investors looking at the ETFs of Vietnam, and we do know there's a significant and strong domestic retail investor base out in Vietnam that's kept the VNI index up despite this flight outflow of foreign funds coming out of that country. But again, whether or not they will also get as spooked as some of the foreign investors is anyone's guess, and that's because they have seen the highest tariffs among the 6 major economies in Southeast Asia. They are now expecting about 46% tariffs on them actually. We've talked about Vietnam having one of the biggest trade surpluses with the United States at about $123 billion, but we also have to remember that in terms of total exports, the U.S. is by far their biggest export destination. According to data from the General Statistics Office of Vietnam, actually, about 30% of Vietnam's exports all go to the American market, and it's by far perhaps one of the more outsized markets actually for a lot of Vietnamese goods coming from their various factories and farms. Now, if these tariffs do come online, it's going to have a major dent actually on exports and possibly the economy of Vietnam. In contrast, for instance, Malaysia also has a significant trade surplus with the United States, but only less than 15% of their exports actually go to the U.S. It's still big, but it's not as outsized as that of Vietnam. So again, Martin, you can just see how complex this is. You're going to have to look not just at the trade surpluses of the countries of Southeast Asia, but also how dependent they are on the U.S. as an export destination. Perhaps the argument is the ones that are more spread out, more diversified away from the U.S. might feel less of a pinch. But again, that's anyone's guess at the moment, because you mentioned a while ago, this could just be the round one of this trade saga or this tariff saga we're seeing from Washington, D.C.
Yeah, ding, ding, right? And this is a 12-round full title fight, sounds like. JP, stay right there. Let's bring in Radhika Rao, senior economist at DBS Bank in Singapore, joining us all around the desk here at the SGX. And Radhika, great to see you. Good morning, I suppose. Good morning. We had a guest earlier on from DHL saying that, look, with trade, which is his business, right, regardless of what happens with tariffs, restrictions, etc., trade is like water. Trade always finds a way, somehow, through the cracks and the crevices, etc., right? For Southeast Asia, is it going to be as easy, going by how dependent some of these economies are on exports to the U.S.?
Certainly for ASEAN 6, if I were to talk about the countries, even in terms of the reciprocal tax rates that have been imposed, or tariff rates, it differs quite significantly. For Vietnam, as was just discussed, is about 46%, and the other side is Singapore, which has an FTA with the US. It's at about 10%, which is the universal tariff rate that has been announced. So I don't think you can really make a broad brush in terms of the impact on the region on a whole. I would think it's a net negative, but there is some time before these are implemented, so there could be, again, some negotiations. I'm sure the U.S. Administration is looking at two things very closely. First, which other country puts some counter tariffs, takes counter action on the U.S., and the second one will be what happens to currencies. If you dial back to Trump 1.0, you had some countries, especially China, where currency fell to the extent which kind of offset the impact on the tariff. Coming back to your question, Martin, certainly I think I wouldn't, because there's a universal tariff, there is no place to hide, so to speak. But I think different countries will approach it differently, and I think the net impact on U.S. will also be different, because if you see Vietnam's basket is much more manufactured goods, everything spanning from electronics to footwear and in between. So the impact on the net consumer on the American side will also be important. But at this point, I'm sure all the Asian administration are looking very closely to see if there's any exemptions or any concessions they could make or get in return, and lower the net impact.
JP?
So we've seen how the Singapore dollar and the ringgit have now reacted, and I want to pivot actually to currencies, because as we know, this is probably the most sensitive of the asset classes, especially when we talk about trade and currencies and exchange rates and everything. Just how big an impact might we see it have on the broader ASEAN currency space, and how immediate might this actually be? And I think that's the thing. I mean, how quickly can we expect perhaps an outsized move from the other currencies that we're waiting to come online later on?
I think as for a start, of course, over the next few hours, the markets open. Indonesia is closed because they are in Lebaran, the Holy Week. So coming back to the currencies, I think most of the ASEAN currencies will be looking at yuan very closely, because they draw quite a strong correlation. So if the yuan shows signs of weakness and where the impact, if you put together all the tariff that has gone up on China, it's almost 54%, much higher than what happened under the Trump first term. So they will be drawing, a direction from there. So if you look at what happened in the past month in March, most of the ASEAN currencies, barring rupiah, have gained because of what happened to the US dollar. I would think starting now, we will look at what the yuan is going to do. If it shows relative stability, which it has maintained to show in the past few months, I would think the ASEAN currencies would take a bit of a knock, but not outsized. And among them, like you already mentioned, Singapore dollar is showing a bit of firmness, and the others not so much. And the ASEAN 6 countries that we had looked at, we had cut this on various parameters, about 5 parameters, and Thailand and Vietnam really stood out to us on various fronts. Connection to US, what kind of exposure to semiconductors, for example, is one of the sectors that has been spoken about. And those were the two countries we were most concerned about, and those are the two countries that have really faced among the highest tariff rates.
Okay, so here's a concern I want to bring up, actually, because when we spoke to the folks at Top Glove a few months ago, actually, they were happy that they were going to see these tariffs on Chinese rubber gloves going to the U.S., thus giving them more market share, but they were concerned that now these Chinese goods that are facing higher tariffs might try to find markets outside, which means that they might have to face a battle in their other markets as well. Yeah. Because we're seeing these huge tariffs on China, will it prompt the Chinese perhaps to look at other markets like ASEAN for which they can divert their goods? And thus could that also have another impact on economies in Southeast Asia that might have to deal with Chinese imports coming in?
I mean, come on, let's say it. I'll say it, right? I mean, a lot of Southeast Asian countries are, I think, probably secretly worried that with China, if they turn their attention to them, it's going to be, look, you're going to dump on us your excess capacity? I'm not sure I want that, right? That's the worry.
Yeah, when you start the discussion on tariffs, it's always who is it inflationary for and who's it deflationary for? Or deflationary or disinflationary. So I would think ASEAN comes in the latter, which is that, the impact would be deflationary because, like you rightly mentioned, from China, from other countries in the region, there will be a bit of movement within. And that is what we've got, cascading tariffs. In fact, you have seen even countries like India and countries like Vietnam have already imposed some counter tariffs or safeguard duties, as they call it, on steel coming from China, coming from South Korea. So I think if these tax rates, which are tariff rates, which are much higher than what was anticipated, remain, you would see a lot more action within each other in the country as well, because you'll be really wary. You'll be protecting your own production base rather than inviting more low-cost producers.
Okay, Veronica, thank you. Stay right there. A lot more to talk about, including the impact on India, which we'll get to in just a bit. Thank you, JP Ong. We'll take a quick break. We're right back.
$1,500 movie? I don't want this flight to end.
Watch the markets open. Brought to you by Emirates.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
The climate crisis is a gun to our head, so we better get our act together.
We need those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard.
You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
CNBC. Live ambitiously.
Welcome back. Tariff Thursday here on Squawk Asia. U.S. President Donald Trump slapping tariffs on just about everybody, friend and foe alike. Now, India, which has been getting closer to the U.S. recently, not spared. It's facing reciprocal tariffs of 26%, which, like for everybody else, kicks in on April the 9th. Now, the move coming as bilateral trade negotiations continue between the two sides. The U.S. has a trade deficit of $46 billion with India, and the Modi government is under pressure to clinch a deal before the deadline next week. Radhika Rao, DBS Bank, is still live. And Radhika, we were talking about this offline. Prime Minister Modi in D.C. not so long ago, and we know that what was on the table as a way to mollify, maybe even placate the U.S., right, ahead of the announcement of tariffs, which at that stage were already looking pretty imminent, right, included India buying more U.S. energy, included India buying more U.S. weapons and arms supplies as well. What is the final shape of this deal going to look like at the end of the day, do you think?
Certainly India has been, I would think, one of the most proactive in terms of, reaching out to the U.S. and also trying to establish some common ground. Obviously, India enjoys a trade surplus with the U.S., much like some of the other Asian countries at large, like we discussed before the break. What you have on hand, or what is likely to come ahead, is the bilateral trade agreement, which we should also remind viewers is different from an FTA, which is a free trade agreement. So under this bilateral trade agreement, there could be terms on India buying a lot more from the US. Like you rightly pointed out, it could be energy, it could be defense equipment, it could be, say, agricultural products. But I don't think it will be a blanket one. I think India also needs to protect its own farmers and agricultural base, which is still the main employer in the country. So that's why I think there will be a bit of a give and take. And the larger aim of the BTA is also the bilateral trade agreement is to increase the size of trade. US at this point is India's key trading partner. It makes about 17-18% of overall exports from India. So it's certainly a very important market. So I think that's why you would see this horde of discussions and negotiations that have been going on all the way since February, when the initial mention of reciprocal taxes were mentioned. So it's going to reciprocal tariffs were mentioned. So a whole lot of discussion that's going on. I don't think we have seen the end of it, with the first cut or the initial phase of the BTA likely to be concluded by fall of this year.
So the question is that going to be enough to lower tariffs from 26%? Is that even the intention?
Absolutely. And, when we started off, when you do a back of the envelope calculation, most of us started off with the tariff differential. It is to mean that what India imposes on the US and US imposes on India. What you've seen now is 26%, which is almost more than 2.5 times what that tariff differential is, to mean that there are a lot of other soft factors that have been added in. Non-trade barriers. You've also seen currency movements, not only for India, for across other trading partners as well, which means that if there are, again, to my mind, if there are some concessions that are made, it could be that you could get a bit more discounted, tariff rate, and that would be a part of the negotiations that are going on. So I would think the window to lower this 26% is very much still live.
Okay, that's good to know for India. Very quickly, India buying more U.S. energy. Are we talking about crude oil? Are we talking about LNG?
No, it certainly be. So U.S. is, India already sources, if I remember correctly, it's about the 5th largest source of crude oil for India. Certainly the mix of suppliers had changed in the past 2-3 years. Russia, which was way back, had become or is still a major supplier.
This is partly at least geopolitical as well, right? Because it's oil and it's also arms that India has been in the past buying from Russia.
Absolutely. Yeah. So I think that mix is going to change. You might see U.S. come up that ladder in terms of being one of the key suppliers. And at this point in general, even from an oil prices perspective, of course, India used to enjoy larger discounts from Russia. Now that discount has lowered. Yeah. But then again, oil on a broader note, is much more at very manageable levels at this point. So regardless of the mix of suppliers, I would think it won't have much of a knock-on impact on
Right. Radhika, listen, we got to go. It's been fantastic talking to you. Thank you so much for dropping by on this very busy morning. Appreciate the time. Come back, see us again very soon.
Thanks, Mont.
Pleasure is ours. All of us. Radhika Rao, DBS Bank, live with us here at the SGX. Quick check on markets before we go. Here's a look at some of the damage we're seeing out here. Tokyo's off-session lows, but still down 3 1/3%. Korea is down 1.5%, so that's narrowed. So have losses in Sydney, which are now down to minus 1.5%. I want to show you what's been going on with yields as well, and this is globally. The U.S. 10, we've seen a pretty precipitous drop. We've gone from about 412 down to now sub 406. So that's about a 7 basis point drop in just a matter of a couple of hours. The Japanese 10 years also sunk. We were at about 150, now we're 137.5. Take a look at German Bunds as well, 271. All right, that's going to do it for this Tariff Thursday edition of Squawk. Thank you so much for joining us. I'm Martin Stone. Keep it right here on CNBC for more Market Open. Street Signs is coming up next. Keep safe. We will see you tomorrow.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, you know, injuries and worries and things that went on throughout my career, you know, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then, because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
We've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future only on CNBC.
Good morning from Singapore. You're watching Street Signs. I'm Sri Jagaraja at the Singapore Exchange. Your headlines at this hour, a momentous day.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
US President Donald Trump delivers his closely watched tariff details, unveiling sweeping duties, including a baseline levy for all US imports and higher tariffs on many of America's trade partners. Asian markets, as a consequence, reeling after the president's announcement. Japan logging the biggest losses in the region, shedding more than 1,000 points. China markets shaping up for deep losses after a White House official tells CNBC The true tariff rate on China is 54%. And US equity futures are tipping a sharp sell-off when Wall Street resumes trade and opens up tonight. Investors look for cover in traditional safe havens like the Swiss franc and the Japanese yen. Gold hit another record earlier in the session and continues to hover at around all-time highs.
We will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating.
It's the day that the world was waiting for, the United States hitting a baseline 10% tariff on the global marketplace. And for some countries, that figure is much higher. Just a reminder that Taiwan's markets are closed today for a holiday, but the rest of Asia is looking like this. So bear in mind that there is not just a global baseline blanket tariff of 10%. There are country-specific tariffs as well. Not quite reciprocal tariffs, but as the president has said, these are kind tariffs. And also there are, on top of that, this is layered, remember, there are sectoral tariffs to contend with as well, especially for the likes of Japan and South Korea. So this is very much a narrative of nowhere to hide, really, in terms of markets, regions and countries that are spared the tariffs. So this is really a narrative that really sinks all boats in the short term. Let's see what happens in terms of the frantic scramble and trade diplomacy that may ensue now to try to engender some sort of exemptions, concessions or carve-outs. There could be countermeasures, and of course trade, as we know, finds a way like water, and one of the consequences of this could be reorientation and perhaps deeper trade pacts, a widening of existing trade alliances like RCEP, the CPTPP, or even a re-energized China Belt and Road. We'll discuss all of that on the program. But in the meantime, you can see the hammer really hitting the North Asian markets the hardest. The Nikkei down by 3.2%, Kospi down by 1.4%, and the Southeast Asia having a rough time as well. US equity market futures are tanking too, with the Dow set to open more than 1,000 points lower, and the Nasdaq currently looking at a near 3.5% drop at the open. CNBC's Eamon Javers filed this report.
President Trump making his long-awaited announcement at a Rose Garden event in Washington, D.C. Wednesday. The president imposing a 10% across-the-board, what he calls reciprocal tariff on countries around the world. And in addition to that, a separate group of about 60 countries that the White House calls the worst offenders are getting individual tariff rates based on their particular tariff history with the United States. A lot of those countries located in Asia, including a 46% rate for Vietnam, a 32% rate for Taiwan, for Japan a 24%, in India a 26% rate, and on throughout the list of countries. For the EU, the figure is going to be 20%. And importantly, for China, I was able to confirm with White House Press Secretary Caroline Leavitt that the 34% figure that the president announced in the Rose Garden is on top of the previous 20% tariffs that the United States had in place against China. So that gives you a 54% figure for tariffs on China by the United States. All of this now pending a response from countries around the world, several of whom have signaled that they will do that at some point on Thursday. So the White House now will be bracing for impact in terms of how all this plays out. For CNBC Business News, I'm Eamon Javers in Washington.
Eamon, thank you for that. We have reporters gauging reaction across Asia, Japan, China, South Korea, and, of course, in this region, Southeast Asia. Let's start with Lynn and Japan. And, Lynn, what really stands out to me is the Nikkei 225 volatility index rising to its highest since September. This is a broad-based sell-off.
Yeah, indeed. Shri, that is what we're seeing. And in terms of that volatility, we're seeing a bit of a spike up, right? 7%. To put it into context, though, nowhere near, and if we have that chart for the year, nowhere near where we got to in terms of the August volatility. So that's something to keep in mind. But no doubt, we are seeing that Japanese equities are under pressure. 3% lower for the benchmark Nikkei 225, around the same for the broader based topics as well. But we are off those session lows already, because we did see that the Nikkei fell 4% in those opening minutes as well. We're seeing that the yen is getting bid as a bit of a haven asset here. Also JGBs as well. And that benchmark 10-year yield, a fall of about 9%. And we're seeing that, 9 basis points, I should say. And we're seeing that then in terms of the impact on Japanese equities. So banks, financials, insurers, they are the worst performing sectors so far as well. And that is, of course, the rate story. It's also concerns around growth. And as we spoke to one of the analysts over at Morningstar yesterday, concerns around overblown valuations as well. So that is translating to quite significant downside here, as you can see on the boards there. Also, some of the worst performing sectors so far today, electronics, the transport index as well. A lot of those majors seeing a lot of selling pressure here. Unsurprising, given that when we look at the export outlook for Japan, these are some of the key sectors. And on the auto front, of course, we know that that's at 25%. That's set to come in at some stage today as well. And then, of course, it's the 24% for Japan in terms of the broad-based reciprocal tariffs as well. And then, of course, what we are waiting out for is what is going to be the reaction coming through from Tokyo today. No doubt, when we look at some of the information that has come out via the fact sheet, for example, by the White House, what they've highlighted as the reason why they've put this 24% on Japan. We heard the US president describing Tokyo as our friend, but talking about these sort of concerns around a weak currency, accusations of currency manipulation, but also concerns around these other non-tariff barriers. They spoke about, for example, the auto sector, and that in Japan, whilst there isn't actually any tariffs on imports, US imports into Japan of autos, that there are concerns around certification and also standards, being able to comply with Japanese standards, raising that as a concern as well. So what are going to be the implications going forward? Well, I reached out to Stefan Unrich, who is a senior economist at Moody's, and particularly wanting to find out as well about the implications for the Bank of Japan. His view, Shri, is that in the near term, we would still get a rate hike because of the concerns, one, around the sticky inflation, and two, around the fact that they have raised the weak currency as a key point. So a rate hike by the BOJ could help. But he says in the long term, there is just so much uncertainty.
I'd agree with that, Lynn. Thank you very much indeed for that. Let's shift to elsewhere in North Asia. South Korean markets are falling as the country was hit with a 25% tariff. Sherry Kang, what's the damage? And I suppose the silver lining here is that the Kospi is off session lows. And is that related to the emergency measures that have been announced, and also South Korea's finance minister saying that there are efforts underway to negotiate with the US?
Absolutely. And of course, Acting President Han Duck-soo is meeting with the private sector representatives later this afternoon to hammer out some sort of a tariff response. And I think the prevalent market thinking this morning, Shri, at least in South Korea, is that Trump's strategy is to go really aggressive with this 25% number and then negotiate on a country level and make adjustments. And remember that South Korea has been through this during the first Trump administration, having to modify, having to make adjustments when it comes to the bilateral free trade agreements as well. That is at least according to Kium Securities in South Korea. And, just to go back to the market behavior at the moment, yes, the Kospi is pairing a lot of losses that we saw at the market open. Volume is picking up, but retail cohort is actually in a net buying mode, definitely treating this as a buying opportunity, quite interestingly. Now, let's go back to the Rose Garden. Of course, President Trump did mention South Korea on a number of occasions, specifically when it comes to autos and rice. Take a listen to what he had to say in terms of in terms of autos.
81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that friend and foe, and in many cases the friend is worse than the foe in terms of trade. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles.
And I do see some negative price action for many of these automakers as well as auto parts makers as we speak. However, the White House did come out with an extra press release talking about how these sectors are not going to face additional tariffs on top of what was already announced and set to go into effect in a couple of hours from now. So I think that is something that we need to think about as well. And it's not all doom and gloom. If you look at some of the healthcare names, the pharma sector in South Korea, there is a bit of a strong rally going on. Perhaps has to do with that very White House press release saying that there will be no additional tariffs on these sectors. So I think, sector by sector, country by country, we're seeing very different kind of reaction. We've got some of the heavyweights like Samsung Biologics rallying by more than 6% as we speak. Shri?
Sherry, thank you very much indeed for that. And this line just in from U.S. Treasury Secretary Scott Bessent says he advises other countries to not retaliate to U.S. tariffs to avoid escalation. Those comments coming from a CNN interview that the Treasury Secretary has done. I'll just repeat that headline. Treasury Secretary Scott Bessent says he advises other countries to not retaliate to U.S. tariffs to avoid escalation. So the door is open, arguably, to some sort of negotiation. So maybe we are in art of the deal territory here, although it's a big open-ended question as to how long these tariffs are going to remain for, or whether they are going to be permanent negotiation or not. No trade until Monday in Taiwan, as we mentioned, but we are expecting a reaction in Hong Kong and the China markets opening in around 20 minutes. Emily, how high are these U.S. tariffs on China now? Because there's some uncertainty on that score.
You know what, Shri, it requires you doing some math because there were 20% tariffs that have been imposed on China already existing since the start of February and the start of March. But then come April the 9th, China will be slapped with an additional 34% in reciprocal tariffs, bringing to 54% the amount that will be charged on China. And President Trump calling this tough love. Let's listen in on what he had to say from the Rose Garden.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
President Trump says he has great respect for President Xi, but they were taking tremendous advantage. Now, China has warned about retaliation if all of this goes ahead with the reciprocal tariff. So what we have heard so far is the spokesperson for the Chinese embassy in Washington, Liu Pengyu, saying that China's opposition to the imposition of additional tariffs has always been consistent and clear. China believes that protectionism leads nowhere and trade and tariff wars have no winners. We are looking at the pre-open for China markets. FTSE China A50 futures set to open down about 2%. I should also note here that talking to some traders, they are expecting a couple of things from the market today. First and foremost, the national team will be on alert, and then the fact that China would have been ready for the announcements that came out today from the White House, and when they come through with their retaliatory tariffs and the comments, of course, we will be watching that very, very closely. We are also tracking and seeing what's happening to the Hong Kong market. We do have a pre-market action here, and the indication is for a lower open by as much as 2.5%. As far as Hong Kong is concerned, U.S. tariffs on China also target Hong Kong. Previously, we are considered a separate customs territory that was been long held. Ever since 1992, in fact, Hong Kong had enjoyed special trading status with the United States, but that got revoked by the Trump administration in his first term in office, and that ended in 2020. What I should also point out here is that the de minimis exemption also has ended. The executive order was signed also earlier today, so that will apply to those low-value parcels less than $800 US, and that is effective from May the 2nd. Of course, Hong Kong there was some confusion, of course, with that, with the postal service here suspending all mail to the United States for about a week as a result of the de minimis exemption. So with that, the de minimis exemption has ended, and that'll go into effect on May the 2nd. Moving over to the Taiwan market, and as we mentioned, there is no trade today and tomorrow for a local public holiday there, but Taiwan not getting spared in terms of the reciprocal tariffs. With a rising trade surplus, it lands it in the dirty 15. 2017, that was $8.4 billion. That has risen to $64.9 billion as of last year. So with that, Taiwan getting slapped 32% in terms of reciprocal tariffs. President Trump also had something to say about the island. Let's listen in.
Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. Actually, they're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that.
You have to put it up there,
but
please.
64%, we're going to charge them.
We are watching, of course, the Taiwan market and the reaction coming through from China in response to Taiwan being included in this list because, of course, another secondary story on top of this is the fact that Taiwan was referred to as a country in this chart that President Trump had presented. And, of course, China not happy with that. And we had the ambassador in Washington saying that Taiwan is China's Taiwan, and that the ambassador on the back of those comments and his tweet, or I guess his post on X, he didn't comment on the new tariffs, but of course made reference, a very stern response to Taiwan being included in the country list. I want to bring up to speed and a note on the China-yuan midpoint set at the weakest level since January the 17th. So we want to track the CNH, which is currently traded in Hong Kong. We have the offshore at 7.3183. And the CNY will kick off trade just after 9:30 when the Chinese markets get up and running. So we'll be watching that closely and bringing the opening trades at the bottom of the hour. Sri, it's back to you.
Emily, thank you very much indeed for that. We will return to the currency aspect of this, and you're quite right and very germane to flag the Chinese currency in the yuan midpoint. And we will, as I said, get some clarity on that later on in the programme. Significant measures also taken against Southeast Asia. There seems to be nowhere to hide here. JP Ong is here to bring us up to speed with the fallout in this region.
Absolutely. And again, as you mentioned, nowhere to hide. No one was spared. All 10 countries in ASEAN are now facing varying tariff measures, including that of Vietnam, the highest, which has one of the 5 biggest trade surpluses with the United States. They're now facing a 46% tariff, actually, on goods exported to the United States. So you have 2 markets open right now, and they're both reacting in negative fashion. You have the Straits Times Index here in Singapore falling by about 0.5%, with the big 3 banks, 50% of that weight, DBS, UOB, and OCBC, all down. Keep in mind, they're not just 3 of Southeast Asia's largest banks, but they're also major players in terms of trade financing. If trade flows are impacted, trade financing could also get rattled, actually, and thus also falling. We have Yangtze Shipbuilding, the Chinese shipbuilder listed in Singapore, also falling today because they could be in the firing line and directly impacted by a lot of these tariffs. You look at the currency space, and it's a bit divergent at the moment. We're seeing the Singapore dollar just a bit firmer against the U.S. dollar in today's session, against the greenback today. Perhaps also a sign sign of the Singapore dollars emerges as a quasi or emerging safe haven play for some investors actually, but also because the 10% tariff of Singapore makes them the cleanest shirt in the basket of dirty laundry. Malaysia, though, we're seeing the ringgit falling to its weakest levels actually in about 2 months, and of course because Malaysia also has been hit by punitive tariffs, it does also mean that there could be some downside. One sector to watch out for in Malaysia in particular actually is the rubber glove sector, because we do know that they are the biggest producers and exporters of rubber gloves in the entire world actually, and they were expected to get more market share in the U.S. because there were tariffs imposed on Chinese-made rubber gloves in late 2024. But with the additional tariffs now in Malaysia of about 24%, this could add more downside actually for these Malaysian rubber glove makers, who could also be facing the pressure from their Chinese competitors if they decide to export that capacity that was meant for the U.S. to other markets and thus increase competition there. Now, important to note here that you'll notice one particular Malaysian glove maker that's actually in the green, and that is Supermax. And that's because Supermax happens to have a rubber glove facility in Texas, thus also meaning that they might be a little bit more immune to some of these tariff actions. But you're seeing here also that the rubber glove makers reacting a little bit more positively than we expected, actually, vis-a-vis all of these questions. But again, that's one of the few bright spots so far in the markets we're tracking. We're expecting the Philippines to come online later on. Indonesia will be offline, but of course the market to watch out for is Vietnam, because that 46% tariff that they're going to impose on Vietnamese goods going to the United States. And we'll talk about why that's important for their economy later on, Sri.
And of course there's tariffs on Myanmar as well, and the optics of doing so after this is a country that just suffered a devastating earthquake are insensitive to say the least.
Yes.
JP, thank you very much indeed for that. Let's bring in Cedric Shahab now, Chief Economist at BMI. JP Yong is also staying with me for this conversation. Cedric, thanks a lot for joining us on this momentous day. Can we pick up on this theme of currencies, because that would be a very important expression of how countries in this region react and respond to the tariffs, how much pressure is on these countries to depreciate their currencies to support exports?
In a word, I would say a lot. So what was clear from the tariffs were that they're targeted at Asia. Why? Because Trump's rebalancing of global trade and reordering and restructuring of global trade means that trade's going to move from Asia to Latin America to Mexico. So if you look at the tariff rates, Mexico is now much more competitive because it doesn't have such high tariff rates. Vietnam was slapped with tariff rates. They're going to become less competitive. So what does this mean for currencies? Well, the first currency we need to look at is the Chinese yuan.
Yes.
Because in 2018, we saw the Chinese yuan depreciate quite significantly to offset some of these tariffs. We've been saying that that's going to be very difficult to do it this time round because the PBOC wants to maintain stability. But ultimately, a 54% tariff on your economy is going to put significant downside pressure on your currency. So I think it's going to be a real challenge for the PBOC to defend that kind of 7.3 level that they've been really working to defend. And the risk is if you have, for example, investors who start to think, well, maybe the PBOC can't defend it at that level. Maybe they're going to let it depreciate to 7.4% level, 7.4 to the dollar, or even lower. Then you start to see maybe some concerns that not only will you get more tariffs, because Trump's going to say, why are you depreciating your currency? We're going to tariff you even more. But the knock-on effect for Asian currencies more broadly and emerging market currencies more broadly is going to put a lot of downside pressure on them as well.
So I just want to bring this back because these reciprocal tariffs, as you mentioned, were based off of the tariffs that are being charged to the United States. It's a bit surprising to note that there are these high tariffs that they're claiming are being charged to the United States. Now, as a person who's big enough to admit that he barely passed macroeconomics 20 years ago, how accurate are these calculations of the tariffs that the U.S. is basing their retaliatory tariffs on? Because it's a bit surprising to see that they're saying that Cambodia's got a 97% tariff, for instance, on the United States. Myanmar has something in the range of the 80s. Are the calculations making any sense?
No, they don't. So the calculations don't make any sense, and also how they've targeted different economies doesn't make that much sense either. So, for example, the fact that key strategic partners have a tariff of 25%, yet Russia has no tariff, for example, or the fact that India, which is one of the most protectionist markets in the world, has a lower tariff rate than other economies. So in that regard, these tariffs don't make that much sense. They make a little bit more sense if you think, well, what are they trying to achieve geopolitically, which is Okay, India doesn't get hit so bad. Why? Because the U.S. wants huge access to that huge market, right? Russia doesn't get hit at all, maybe because Trump is trying to say, well, we need Russia on our side, so we want to really give them a sweetener, right? And so you see that from a geopolitical risk lens, there are huge reasons to think why this is odd.
We'll leave it there for now. We'll get back to you later on in the programme. Thank you very much indeed for that. We're back in 2 minutes.
CNBC. Live ambitiously.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. There is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe, because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes, and on demand, the machine will actually mix it up and then deliver it to any Go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, kind of mental resilience.
Well, I'm really glad social media wasn't around back then, because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archives, stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
Hong Kong and China markets are coming online, and we are tracking weakness for the Hang Seng Index, up and running now, down about 2.5% at the open at 22,669. The Hang Seng Tech Index pulling back 3%, and pronounced losses for the Hang Seng H-Share Index, or the China Enterprise Index as well, down 2.5%. Analysts, I should say traders, are saying that this could trigger some short-term profit taking. We should see it in the China Enterprise Index, what we know as H-shares, as well as some of the tech stocks in Hong Kong. As far as the China markets are concerned, it could be a little bit more muted. The national team, of course, will be on high alert, and China would have been ready for some of the announcements coming through from China. The Shenzhen Composite opening lower by 0.7%, the Chinex off 0.7%. Of course, we are tracking the Chinese currency, so when that first trade kicks in, we'll bring that up to speed, but the PBOC, the yuan midpoint was set at 7.1889, and we are looking at spot last traded at 7.2675. The first trade has yet to kick in here offshore in Hong Kong at 7.3120. We want to look at some stocks, and I'll start with some of the heavyweights in the Hong Kong market. And we are red across the board. Losses in excess of 1% across the board here. Techs like Tencent down 1.8%, and we are looking, of course, at shares of Alibaba as well, more pronounced of 4%, and we're looking at Meituan shares down 1.8%. I do have a couple of those trade proxies. CK Hutchison, which of course has been ensnared, the political hot potato, if you will, with the ports deal that is still being worked out. There was an expectation that something was going to be signed on April the 2nd. That did not happen. That was their own little timeline, but not really a deadline, if you will. We're looking at CK Hutchison shares pulling back by 1.5%. Tektronic Industries, this is the maker of power tools, all sold in Home Depot. A lot of it is made in China, so they're going to be impacted with that. And the stock is down 8%. This is a Hang Seng component stock. Miniso, which sells all those cute things, and that's how they describe it. They are, of course, all over the world, but also in the United States. Miniso shares down 6.8%, and Lenovo, the world's largest PC maker, they, of course, are diversified across 30 countries when it comes to manufacturing. But the way that we saw the reciprocal tariffs being announced today, really many countries have not been left untouched. Lenovo shares down 5.25% in the early minutes here. We're seeing quite a bit of downside play out here. Just to recap what was announced by President Trump, it's a total now of 54% when it comes to China. It's 10 plus 10 and then 34. This, of course, based on the U.S. calculations, including currency manipulation and trade barriers. And if just to remind everybody, Hong Kong gets kind of looped in with China as well. It is considered a separate customs territory, but since Trump's first term in 2020, they got rid of the special economic privileges or the trading status that Hong Kong had with that of China. So 54% for China. We are waiting for a response to come through from the Chinese officials. What we've heard so far from the Chinese embassy in Washington, that China's opposition to the imposition of additional tariffs has always been consistent and clear. Sri.
Emily, excellent roundup. Thank you very much indeed for that. Let's bring in Dan Wang now, China Director of the Eurasia Group. Cedric Shahab, a Chief Economist at BMI, is still with us. Dan Wang, thank you very much indeed for joining us on this very critical day. How will Beijing respond?
Well, right now, Beijing seems to be fully prepared because they have been talking about doubling down the long-term investment in transformative technology for a long time. And they have encouraged Chinese companies to relocate more to overseas markets in order to avoid some of the tariffs. But we can see today it wouldn't work as well as they had hoped. So probably we'll see more of the verbals come back at first, and then maybe more companies to be included on the unreliable entity list. And after that, maybe more restrictions to Chinese market and restrictions of Chinese companies investing in the U.S., but it's going to be a gradual escalation.
Cedric, if I can come to you, it was very clear during the two sessions that the leadership was committed and has the capacity to underwrite 5% GDP growth. Do you think that narrative still remains intact despite the pressure on the external side now that we have 54% tariffs?
I think it's going to be a real challenge for them to hit their 5% target. Already before these tariffs came in, we thought growth was going to come in around 4.5%. They could spend more money, so they already widened their fiscal deficit target from 3% to 4%. They could certainly add more fiscal power to that, but considering the weakness in the consumer sector, considering the weakness in the housing sector, it's going to be hard to get to that 5% target, especially with these new tariffs.
Thanks for that, Cedric. Emily has a question.
Thanks a lot, Sri. I want to put the question to Dan. if we can talk about the latest data points that have come through, and earlier on in the week we had the factory activity hitting a 12-month high. In terms of what we can expect going forward, given the developments today with the latest in terms of tariffs, it's going to be a cumulative 54%. How is that going to be? How do you anticipate this will affect the factory activity, the manufacturing in China?
Well, the manufacturing activity in March did have this rebound from February. We have to remember that PMI is month-on-month, not year-on-year. So comparing to the year before and 2 years ago, actually this rebound is quite mild. It has reflected a weaker demand from overseas, especially from the American market. And also, China has been trying very hard to win more market in Global South and more market share from the American allies. So down the road, I can see more of a capacity building within China. Actually, there is more of urgency to build up more competitiveness rather than cutting back the production.
Do you expect to see any kind of negotiations from China when it comes to a couple of things? There are two deals that we are watching. There is the TikTok deal, how they're going to be divesting that, and also the CK Hutchison and the Panama ports. Is there any leverage on a China side when it comes to these business deals, given that President Trump is so transactional?
Well, there's not much of leeway for China to give in those two cases because they're sort of borderline China's red lines. And what China can do actually is put other things on the table. One of the major tools that we think China could talk about is the currency. So there's a high chance that we might see a re-anchoring of Chinese currency away from dollar and to a broader basket of other currencies. And also there might be a one-time revaluation of the RMB maybe towards the end of this year if the negotiation with the U.S. can make any progress. But in either case, this is a change in the export price if there's an adjustment to RMB valuation, and it's a much milder response on China's side rather than doing like export control or other type of deals.
Cedric, come in here.
Yeah, sure. So in terms of the revaluation of the Chinese yuan, sure, maybe it helps to offset some pressure from the U.S., but considering that the housing market remains in a slump and you have a bit of a kind of deflationary scenario, I think a revaluation would be pretty tough on the Chinese economy. So I think, to your point earlier about a 5% growth, that's going to be hard even with a revaluation of the Chinese currency.
And I agree to that to a certain extent, but I do think there's a priority here when it comes to exchange policy because the bilateral trade between China and the U.S. has been coming down. So trading relations with other trading partners has become way more important in recent years. And for China to ease the trade tensions with other trading partners probably is a more priority. And a revaluation or more of a stable relationship with other currency probably is a better approach. And when it comes to domestic economy, actually, it would be nice if the central bank could cut the interest rate more aggressively, but they want to protect the domestic commercial banks. They're under huge pressure. And also there is a fear that if they really cut rates, that could cause a lot more volatility in the foreign exchange market. So I don't see much room over there.
Yeah, that's why I think they're in a very difficult situation. They can't really cut rates because, well, the banks are in a difficult situation. And if you're a household, you don't really want to borrow money anyway because your mortgage is perhaps underwater already. So I think the Chinese policymakers are in a tough bind. And I think Trump knows this, and that's why he's pushing so hard.
Does it feel, though, that China is ahead? China is winning this global battle for technological supremacy, and is DeepSeek an inflection point? And to what extent, Dan, do you think that is going to ring fence and protect the Chinese economy from these external volatility and risks?
DeepSeek is a great breakthrough basically break up this monopoly of AI by the American firms. But beyond that, there's not much a real GDP generation coming out from the DeepSeek related application yet. It's going to be a long-term process. And for China, investing in the AI automation has been the long-term effort. And we can see maybe 10 years down the road when companies figure out how to organize their business using this new technology, then that can really generate momentum. But in the short term, I see more of a substitute effect of the AI technology. So the job market in China is in a very, very severe situation at this point. Job quality has deteriorated, although the unemployment rate stayed quite stable. So I don't think the breakthrough in AI or new energy or biotech can really pull China out of this swamp. What's really important is still the fundamentals. It's the housing market, it's the consumption.
Consumer confidence that needs to come back. Emily, please come in.
Thanks a lot, Sri. And Don made a very good point there. He was talking about the housing market. That makes up about 20% of the Chinese economy. I believe exports make up another 20% of the Chinese GDP. Now, with these two key sectors of the economy, what's going to happen? I mean, you guys were talking about the around 5-year annual growth target. What really is, how is it going to play out? What kind of fiscal stimulus is the leadership going to have to throw at the economy in order to support it?
Well, I don't think there's much there is much to be gained in the consumer market because that will require a massive cash transfer to the household sector, and the government is still unwilling to do it. What's really the driver for domestic economy is, once again, manufacturing investment, infrastructure investment, and export. And for the export side, although the new orders from the US and Europe could be really limited this year, there are more Chinese companies setting up factories overseas. And in the initial stage, all those machinery, industrial input, a lot of imports will be coming from China. That's a real boost. So I'm not too worried actually about the short-term performance of export. But for housing, that's a real concern. And the housing market is still going down, with the exception of a few cities like Shanghai, like Chengdu, they're doing well. But the vast majority of China, they're losing population. Internal migration have essentially stopped, or still have this very mild cross-provincial flow, but very, very low now. So the housing market probably will wait for another few years before it can really reach the bottom. And for central government, I think some proposals are on the table. They're still discussing it. Maybe setting up a housing bank, taking over the excess inventory of the housing and get rid of them. But again, it's like a long-term process. The short-term driver really is external market and internal investment.
We are looking at the yuan touching a low of 7.3. Do you expect the currency to further weaken by, some are saying, to 7.5 by the end of the year?
Actually, I do not. This 7.3 psychological threshold hasn't been breached for 17 years. And there is a real danger to breach that and keep it low for a very long time. The capital outflow pressure or the capital flight pressure has been there for a while. And China, of course, has large exports to counter that pressure. But as I said previously, I do believe it's in China's best interest to either keep the currency stable or revalue it to a certain extent, because that can ease the trade tensions with other trading partners.
Dan, thank you for that. Can we pivot back to the US, Cedric, and let me just bring you back in. How should we price March payrolls on Friday in this critical week?
Well, I think they're going to be very important. So we saw some pretty good data from the private sector, but I think the trends we've seen in the US economy have been slightly weaker consumer, much weaker confidence levels from businesses and consumers themselves, slightly sticky inflation, and a softening of the labor market. And although this is just one data point, if it were to come in quite weak, then that really raises questions as to how much Trump can actually push with these tariffs and how much other countries might be able to negotiate down. Whereas if it comes in very strong, then that suggests that the U.S. economy is doing quite well, despite some of the concerns for Q1, which have become widespread. And then maybe, for example, Trump feels more emboldened to really push and negotiate hard. But I would say, we're at the start of what we think is a tough negotiation process. Scott Bessent basically said, this is the higher level of the tariffs. The fact that the UK has a tariff rate of 10% suggests that maybe some other key allies, if they were to, for example, spend more on military, purchase more U.S. natural gas exports, and invest much more into the U.S. economy, perhaps they could lower their tariff rates to around 10% as well.
We're in after the deal territory now, aren't we? And now that the president's tariff policy is somewhat clearer and potentially destabilizing for the economy, if not the global economy, does the Fed now need to signal a more proactive stance and a willingness to cut 2 times, perhaps 3 times, or even more?
Yeah, absolutely. So the message that Powell said in his presser was that he would think inflation from tariffs would be transitory, and that it was a bit of a dovish message. So I think if the economy is really weakening at the edges and you have a weakness in the unemployment rate, then essentially you're going to have some concerns from the Fed. And if they don't think inflation is going to be problematic, then that will give them room to cut 2, 3, even 4 times, depending how fast the U.S. economy slows.
Cedric, thank you for that. And Dan, if I can get back to you, trade always finds a way, like water, and manages to find a way despite these blockages and these barriers. From the China standpoint, could we see, therefore, perhaps a re-energized or reinvigorated Belt and Road Initiative if we're talking about the importance of exporting excess capital?
Oh, for sure. And this round of tariff actually could only motivate China and Chinese companies to venture out more. And in the global south, Chinese goods and exports are quite crucial, especially if you go to Africa and Latin America. China's position in this world is a producer. So no one is going to produce for Latin America and Africa, especially low-income class. So for Chinese companies, there's always a market. It's just those markets' value added is not nearly as high as the U.S. So eventually, their ultimate target is still to going back to the developed market. But now we can see more opportunities as China talks to the American allies like Japan, Korea, EU. So almost every company I talk to has a European strategy. And the European market is the most important market for China now. And they're going to put more effort to win their favors.
Interesting. Emily, please.
Cedric, one more question from me here. And this, as we look at the reciprocal tariff percentages, anywhere from 30, 40 to 50%. What is your expectations in terms of the impact on inflation? You touched upon this just a short while ago. We had heard from Acer a couple months back, even before we got anywhere close to today. This is a Taiwan PC maker. They said that they were already going to be increasing their PC prices by 10%. They're probably going to have to rethink that now. What do you think this is going to do to inflation globally?
Yeah, that's a really good question. So the estimates range in terms of a 10 percentage point increase in the average effective tariff rate for the U.S. seems to increase inflation by about 0.7 to about 1 percentage points. And so if you're actually going to see a 20 percentage point increase in the tariff rate, then that has the potential to really push up inflation in the U.S. Now, of course, that's going to be mitigated by factors such as exporters absorbing some of this price increase, or the U.S. dollar if it appreciates, for example, or other countries, their currencies depreciating. But ultimately, a 20 percentage point tariff rate increase on U.S. imports certainly pushes up inflation by about maybe 1 percentage point or even more.
Cedric, we're going to have to leave it there. Needless to say, I wonder if a stagflationary situation is the next narrative that we have to talk to, with an unholy trinity of stagnant growth, higher inflation and higher unemployment. We'll have to wait and see what the data tells us. Thank you very much indeed to both of you. Dan Wang there from Eurasia Group and Cedric Shahab of BMI. My thanks to Emily. Thank you. Right, moving on. Tesla stock hit hard in extended trade post-tariffs announcement in a dramatic swing from the regular session. We saw Tesla's quarterly deliveries fall 13% as sales to China and Europe stay challenged while it continues to face boycotts over CEO Elon Musk's work with the Trump administration and DOGE. And as we said, all that is before the fresh implications from tariffs. Let's bring in Steve Westley now, founder and managing partner of the Westley Group. He is also a former Tesla board member and former California state controller. Steve, thank you for joining us. How exposed is Tesla to auto tariffs and this new regime of global tariffs?
Well, I think they're quite exposed. And look, this is just a rough quarter for Tesla. And they may not have hit rock bottom yet. Again, they delivered 337,000 vehicles versus analyst estimates of 380,000. That's a big miss. And we have to stand back and watch. That's a 13% year-over-year drop from Q1 2024, while the rest of the world, EVs are up in sales 20%. I don't think the tariff issue is going to help them one bit. We'll see.
There are a couple of headwinds in this quarter for Tesla. What does the outlook hold, Steve, in your opinion? Do you think we've seen the worst of this drawdown in sales?
Well, I don't think so. Look, the share price has dropped 45% from the peak in December of $1.5 trillion market cap down to $908 billion today, losing 50% of your market cap. That hurts. And what's happened here, Tesla's been hit with a triple whammy. No new product for the last few years and no date for the $30,000 car, which is, I think, what people really want. Political firestorm, protests in the U.S. and in Europe. European sales down 47%. That hurts. And then huge competition from BYD that's shooting up like a rocket and other Chinese competitors. So Tesla's going to have its hands full.
Are there any positive catalysts? We've got some upcoming product unveilings. We've got the June robo-taxi launch in Austin. Can that help move the needle for Tesla in a positive direction, Steve?
Well, a little bit, but let's talk about this. The only new vehicle Tesla's introduced in the last 5 years is the Cybertruck, and that's really been a flop. And so the big issue here, and it's what everybody's looking at, Tesla's trading at a huge multiple. And Tesla is trying to convince the world this is a technology company, rapid growth and so on. They need to really win in the full self-driving wars. And right now, Waymo announced today 200,000 rides per week in San Francisco, Los Angeles, Austin, Phoenix. Tesla's not even in the ballgame yet here. Waymo able to show data showing they go 10,000 miles between the critical interventions. Tesla's number is more like 490 miles. So investors have to be looking at this sort of thing. In the meantime, BYD just released its AV, autonomous vehicle technology. We love this in America. It's called the God's Eye, and it's free. And Tesla's charging $9,000 for their full self-driving. I mean, gee whiz, you can buy a BYD car for 9,000 miles. So Tesla's got some work to do, I think, to be competitive in the full self-driving area.
Thanks for that, Steve. And again, ramifications from tariffs, are they going to have to inevitably raise prices across the product portfolio, or the fact that they produce ostensibly in North America for the North American market, does that take some of the sting out?
Well, look, let me step back from it. There's one thing that all economists agree on, left and right, and that is tariffs don't work very well. So the U.S. slaps tariffs on China. It'll make it harder to sell Chinese cars in America. But realistically, this is only going to hurt the Buick, Envision, the Polestar 2. I mean, a handful of other Chinese companies are trying to sell cars in the U.S. And China's likely to turn around and put, I would guess, equal tariffs on U.S. cars being sold in China. The simple math is the U.S. today is selling a lot more cars in China than China is selling in the U.S. It feels to me like a case where we might just be cutting off our nose despite our face. I don't think it's going to work.
Steve, my colleague Phil LeBeau, when the 25% tariffs on car makers was announced, was warning that this could mark the beginning of a recession in the auto industry. Would you go that far? And how probable is that worst case scenario?
Well, I think it's early to say that yet, but if automakers on every side of the ocean or in the planet have to raise their prices, that is going to reduce sales. That could lead to layoffs. That has all the recipe attributes of a recession. So you got to be really careful. Now, the flip side is our president has been known to change his mind literally day to day. So we'll see how the market reacts. I'm guessing the market will be down, and I have a hunch there'll be some reconsideration in Washington. We'll see.
Steve, and throughout all this, BYD has gone from strength to strength, enjoying another blockbuster quarter. Is it going to continue to be the big winner of all of this, or is it going to be flawed like everybody else is ultimately by this global tariff regime? And for Tesla, what's the workaround here? Can they regroup? Can they rally and return with a convincing counter-narrative?
Well, let's break this into two. First, BYD is booming. 3 or 4 years ago, you'd be hard-pressed to find an American who really knew what BYD does. They are booming. BYD delivered 416,000 EVs in Q1, up 38% year over year. That is spectacular growth. They're now building facilities in Indonesia, in Thailand, Brazil, Turkey, Hungary. This is extraordinary global growth, and they're doing it with this brand new, you might call it a subcompact car, $15,000 to $18,000 vehicle. But they've got 21 models. Tesla makes 6, only one new model in the last 5 years. The big takeaway is the world is going all electric, and the legacy automakers are struggling to find an answer to a great $15,000 EV. That's the big battle that's happening right now. BYD is winning it.
Steve, if you were to put your former Tesla board member cap on, what would you make of this backlash against Tesla cars because of Elon Musk's controversial role within the Trump administration? And if he does leave Doge, then could there be a rally in the stock? Is that what shareholders want to see at this juncture?
Well, there was an announcement leaked today in Politico, or reported today in Politico, saying that Trump might be, Musk might be leaving Doge, and the market was up a few percent on that news. So the market seems to be speaking on that one. But I think, Tesla could turn things around, but they've got to get cheaper models out quickly. They need major breakthroughs on full self-driving, and I think they just need a little less drama, but we'll see.
Steve, great talking to you, sir. Thank you very much indeed for your thoughts today. Steve Wesley there of the Wesley Group. Thank you. We'll continue to track the tariff reaction throughout the programme today as more markets open up here in Asia. Stay with Street Signs. We'll leave you this hour with some global reaction to the tariffs and live pictures of the Shanghai stock market. We're back in 2 minutes.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
I think ambition is really an extension of faith. If you first off believe in yourself, that gives you the power to chase your dreams. My ambition starting out was to have a career, not a job. I wanted to be excited to go to work every day and go someplace where I could grow, learn, and engage. CNBC viewers are definitely ambitious, and I think most of them see their money as a tool, a way to pursue their dreams and pursue their goals. I hope to always be a clear, accurate, and investable voice for all of our viewers. You'll learn a lot here at CNBC. It's also a lot of fun.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action. We take action now.
Join the sustainable future, only on CNBC.
You're watching the second hour of Street Signs. I'm Sri Jagaraja at the SGX. Your headlines at this hour. Asian markets continue to feel the brunt of US President Donald Trump's tariffs. He revealed sweeping duties, including a baseline levy for all US imports and higher tariffs on many of America's trade partners. Chinese stocks still underwater but off session lows after Trump revealed bigger tariffs on the world's second largest economy. A White House official tells CNBC the true tariff rate on China is 54%. And investors look for cover in traditional safe havens like the Swiss franc and the Japanese yen. Gold hit yet another record earlier in the session and continues to hover around all-time highs.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
US President Donald Trump there touting his move to unveil tariffs on the US's trading partners. America is slapping a baseline 10% tariff on US imports, and for some countries that figure is much, much higher. Taiwan and Indonesia are closed for their respective holidays, but this is the current action in Asia, and it is looking quite messy, although the silver lining here is that a lot of these markets are off the session lows, including the Nikkei 225 and the Kospi, but still deeply negative. China markets are 30 minutes into trade, and we are gauging the impact from the Trump tariffs. Emily Tan has the market update now. Good morning.
Hi there, Sri. And we are 30 minutes into the trading day, and we're looking at the Shanghai Composite to peek its head above water, just kind of shaking off of the earlier weakness in the market, and Shenzhen also down on the session, but just ever so fractionally down at 0.4%. There is a big expectation that the national team is on guard, on alert today for any weakness in the market. China also, for its part, would have been ready in terms of the announcement on tariffs, and we are waiting for to hear some sort of comment or response from Beijing in response to the latest 34% that has been added to the 20% earlier in March and February. We're also looking at retaliatory tariffs and commentary to come through. So we are watching what's happening over in China in response to all of this, which President Trump has called tough love. He says he has great respect for President Xi, but they were taking tremendous advantage of the United States. So with that, they see China charging 67% to the United States, and that includes currency manipulation and trade barriers. So their U.S. is giving China a discounted 34% in this latest announcement earlier today from the Rose Garden at the White House. Looking at the Hong Kong market, we have come off the day's lows. The Hang Seng Index now traded off about 1.4% to 22,879. 8 shares down 1.3%. We have the tech plays off a more pronounced 1.8%. We do have some trade proxies in the Hong Kong market that are taking it a bit harder. And if we could pull those up, we have names like Tektronic Industries. This is the maker of those power tools. Everything is sold in Home Depot, made in China, listed in Hong Kong. The stock is down 8%. We're looking at CK Hutchison, which has been holding this hot potato, if you will, in their ports deal that they're trying to get across with BlackRock. They could be making $19 billion for selling 43 ports, including Cristobal and Balboa. Of course, China, on its part, has recently said that the state administration market regulator is going to be looking into this deal. So I guess for now it is on pause. They haven't signed the deal that was expected to happen on April the 2nd. We're looking to the likes of Lenovo. This is the world's largest PC maker, #1 by market share. They are pretty well diverse across 30 markets, but of course with the long list of reciprocal tariffs, and we are looking at 20, 30, 40%. Lenovo likely to be impacted, and we're seeing a decline of 6.3%. Yuyun Industrial makes shoes, sneakers, of course, a lot of it in China, and the stock pulling back by almost 5%. So we are watching here the Chinese markets, the Hong Kong market, and the Taiwan market will not be traded tomorrow for the public holidays. So of course, we are looking at what's happening today and the weakness in the trade on the back of the latest reciprocal tariff announcement. Shri.
Emily, thank you very much indeed for that. And that's the standout really, isn't it? Shanghai Composite is displaying some relative resilience at 3,352. Southeast Asia, meanwhile, has been slammed with comparatively higher tariffs. JP Ong is tracking the details and joins us now. JP.
And unfortunately for equities across Southeast Asia, it's a little bit more to the downside or pronounced to the downside. In fact, we do know that the Indonesian markets are still offline and perhaps saved by the Eid holiday there. But again, we'll see how they react when they come back online next week. But you can see here across the board, the Straits Times Index, the Bursa Malaysia, and the Philippine PSEI, which is the leading laggard today, down by about 0.9%, all reacting negatively to the tariffs that seem to have hit all countries in Southeast Asia in varying degrees. Now, the one market we also want to track later on is Vietnam, because we did see the VanEck Vietnam ETF fall by about 10% overnight. And the VNI index happens to actually be the best performer year-to-date in Southeast Asia, up by about 4% actually since the start of 2025. But that could easily reverse if we start to see some of that weakness coming from the ETF feed into the local markets in Ho Chi Minh at about 10:15 Singapore, Hong Kong time. Now, I do want to compare how they did actually overnight with the VanEck Indonesia ETF, because while markets in Indonesia are offline, we saw the VanEck Indonesia ETF actually just see a slightly lower decline. Now, both these countries have been hit by tariffs, and you might say that the Indonesian tariffs, while at above 30%, is nowhere near the 46% tariffs that Vietnam is facing. But keep in mind that exports matter to Vietnam relatively more than that of Indonesia. In fact, when you take a look at export data from the statistics offices of Indonesia and Vietnam, you'll notice that exports from Vietnam to the United States comprises 30% of their overall exports to the world, whereas in Indonesia's case, it's only about 10.6%. So a hit for Indonesia, but perhaps not as grave as that as what might actually happen to Vietnam if we start to see these tariffs really hit some of their producers and also companies in the United States that happen to have been domiciled out in Vietnam. Now, we want to take a look also at currencies in today's session. And again, also some weakness for the most part. We do see that the Vietnam dong, which is trading right now, has hit its weakest level on record against the U.S. dollar at about 25,700 against the greenback. And while we're also waiting for the Thai markets to open later on, we do see the Thai baht also today weakening to its lowest level since mid-January, about 34.39 against the U.S. dollar. But also weakness for everybody except for the Singapore dollar, which might be just seeing a little bit of firmness because they have the lowest tariffs levied on them. And also because the Singapore dollar is viewed by some in the market as a quasi-emerging safe haven play of choice, actually, which could be gaining them some favor. But again, they're the one strong currency so far, and strength is perhaps a bit of an overstatement at the moment because they're steadier than strong so far this Thursday, Shri.
JP Ong, thank you very much indeed for that. We're getting some lines from China's Commerce Ministry in a reaction here, and as we've been discussing and also expecting, the response is very decisive. China firmly opposes this and will resolutely take countermeasures to safeguard its rights and interests. And remember what Treasury Secretary Scott Bessent has said. Those countries who do respond with countermeasures will be in line for escalation. So this takes arguably this entire narrative and confrontation to another level. And are we, begs the question, in a tit-for-tat retaliatory spiral? China Commerce Ministry says it's made a statement on the announcement of the reciprocal tariffs from the US and urges the US to immediately cancel what it calls unilateral tariff measures and properly resolve differences with trading partners. Many trading partners, China Commerce Ministry says, have expressed strong dissatisfaction and clear opposition. A quick one on Japan as well, pardon me. We heard from China, countermeasures there. Japan's Trade Minister Muto said he held an online meeting with the US Commerce Secretary. We don't know, and we're waiting for any details on what the upshot of what that could be. We're getting another line here from Trade Minister Muto from Japan, told the US Secretary new US tariffs would bring a negative impact on the US economy as well. We'll leave that there for now. Let's bring in Sherry Kang with an update on the reaction in the South Korean market. The good news here is that it's clawing its way off the mat and clawing its way off session lows, Sherry.
Yeah, and I think a lot of traders and investors are getting more selective in terms of what to dump and what to buy. And I want to look at the shares of LG Electronics just to piggyback on JP's report on Southeast Asia impact in all this, because we've got LG Electronics along with the Samsung Electronics, by the way, having a lot of exposure in Southeast Asia in terms of their production capacity. In fact, both of these companies have production plants in Vietnam, Thailand, China, and Mexico. Perhaps the fact that Mexico was not mentioned and that was not in the list of reciprocal tariffs today by President Trump is a relief for them. But when it comes to companies like Samsung Electronics, they actually manufacture half of all their mobile phones out of Vietnam. So the implication is pretty big there. And LG Electronics, in fact, giving up close to 5%. In fact, consumer electronics makers, this sector is a bottom performing sector on the cost beat today. And then let's pivot to the auto parts makers, because we spent a lot of time this morning talking about the auto tariffs, of course, going into effect, although they don't really, they're not facing additional tariffs with this morning's announcement from President Trump. Auto parts makers are faring worse than Hyundai's and Kia's. Perhaps has to do with the fact that they don't really have a lot of localization in place in the United States. This is something that Macquarie's James Hong pointed out this morning. So we've got Hyundai Mobis for one, giving up 3% and pretty much a similar level of losses coming through for these auto parts makers. Hankook Tire, for example, also down more than 3%. As I pointed out, that it's not all doom and gloom, and I did mention in the last hour there was a bit of a rally going on in pharma names, healthcare stocks, and I do want to draw your attention to what's going on in K-pop stocks as well. This is something that a lot of local brokerages were talking about at the start of this year, that this could be a safe haven play going into 2025, because this is an area that could be relatively safe, immune from all the tariff-related uncertainty, and we've got some bid coming through. K-pop stocks are looking pretty resilient on a day like this. Really quickly, Shri, let's take a look at the currency board, because we do have some recovery, tiny bit of recovery for the Korean won versus the U.S. dollar. Perhaps it's really the BOK's line saying that they're monitoring situation, market performance in financial and foreign exchange markets, and also the fact that the South Korean government officials are coming out fast and furious to cope with these tariff announcements. So we've got some bid coming through, 14.67 per dollar. Shri?
Yes, it's a similar conversation in Japan as well. And let's just flesh out these lines from Trade Minister Muto, where he is electing to take a more of a diplomatic approach, is electing for negotiations as opposed to countermeasures and retaliations, which seems to be at this point in time the narrative from the leadership in Beijing and Japan. Minister Muto is saying we need to analyze the content and examine the impact on Japan's economy. Will ask, and this is important, the US to exempt Japan from tariff measures. Told the US counterpart that new tariffs announcement is extremely regrettable, and this is after Trade Minister Muto held an online meeting with US Commerce Secretary Howard Lutnick. Right, we'll leave it there for now, and ask Sherry to stay with us for the conversation with the next guest. James Demert of Main Street Research, CIO there, joins us now. James, thanks for your time. I've got to say, you've got despite everything that's going on, you've got a contrarian bullish outlook for US equities. You've got a 7,050 year-end S&P target. How do we get there?
Thanks, Shri. Yeah, even with this, we're unshaken. And I think a lot of that comes from the fact that this decline that we've seen, which I think is an overdue correction, fueled by the uncertainty of the administration, really has just, I think, brings the market a little bit more in line. This continues to be a bull market, an AI tech-led bull market that for the moment I think investors have lost track of with all this news about tariffs. Now keep in mind, and I think this is important for investors who are watching, the tariff news is not new. This is old news, and this is why the markets in certain parts of them have fallen pretty dramatically over the last, let's say, 6 weeks, 8 weeks. And in many cases, particularly here in the U.S., I think in overseas, this still adds up to a normal correction in stocks. We're down 10% on the S&P, a little bit more in the NASDAQ with more beta. But this is typically what you see in bull markets. Will tariffs or any of these administration policies knock or derail the bull market? We don't think so. But I do think, and I think Sherry had a really good point, today is a microcosm of what we're going to see going forward. The bull market's going to change its colors a bit, right? There's going to be some companies that are not going to survive the tariff implications. Remember, Trump wrote a book called Art of the Deal. So I think this uncertainty that has caused the decline is now going to turn into certainty because now we know what it is, and that's going to go from this to deal making. So I think this is the worst we're going to see. Interesting, the market, Shri, bouncing off the lows of last week and now starting to gain some strength but in different stocks. So the bull market's still alive and well. PEs are more compressed. We think the rest of the year is going to be quite good once we get past this.
Do you not feel, though, James, that this is a global economy that is now on the brink of an all-out trade war and the countermeasures and the retaliation that goes with it?
Well, if you study Trump's past, there's a couple of things you got to know about this guy. Is he loves making deals, negotiating, and our view has been that this whole tariff subject is a way for him to get different countries and companies and sectors of the markets to come to some sort of compromise. And if they don't, that's where I think investors are going to get hurt. And you already see it in some of the auto stocks, and I think it's going to be some problems with China, so you want to focus on companies like BYD that doesn't do business mostly in the United States. So this is going to be a stock selectors market, a sector selectors market, but we do not think that an all-out trade war will come to pass. I do think that also investors should recognize, companies in the world has dealt with rising prices, and companies, if you look at 21 and 22, where inflation ran rampant, right, from 2% to 9%. That was really a big cost disruptor for companies and countries, and markets still did well. So yes, this is going to reset things a bit, but now again, stocks down, PEs compressed, rates have fallen, which is actually a bullish thing. I mean, we sort of know that from the way interest rates relate to equity prices, particularly in technology, where there's, I would suggest, even a fire sale.
James, it will all boil down to earnings. For your call to really hold earnings and need to support the markets. I get your point about lower expectations going into the earnings season is better than high expectations, but you don't expect these companies to come out in earnings call or outlook saying they just don't have a lot of visibility going into the rest of 2025 and maybe shy away from giving forecasts.
Yeah, I do think there's a human error going to go on here. I mean, a lot of investors, a lot of analysts are fearful. They've already marked down estimates going into the quarter. But again, our view, and I'm really looking forward to next Friday when the big financial stocks report. Now, these are companies that are tariff immune, right? JP Morgan, the list goes on. We think those earnings are going to be way better than expected, Sherry, but that is a critical issue. For this bull market to continue the way we think it will, we're going to have to see earnings across the market be better than expected. We think that's going to happen.
Do you think the market's thinking, if it bottoms out from this level on, that these tariffs are not going to cause a recession, and President Trump can, I don't know, call it a win for his policies and be able to push for some of the other initiatives like deregulation, and that is a good thing for the markets. Is that your cycle? Is that the cycle in your head?
Yeah, Sherry, that's part of our case, that we have to get past the tariffs. Again, I think the certainty of knowing what they are and now the deal making that makes them better, any success on that front is obviously going to allow this administration, which has a lot of ideas, and some of them are very aggressive, but it will allow that tax cutting that we sort of have in our model of how we get to 70-50. I know it seems like a far away now that we're down, but that's how we get there, and earnings are past that. And also keep in mind, anybody who's worried about a recession has to realize that the Fed's got a lot of room to cut more than is expected, and they probably would. Again, even if there's inflation, it's bifurcated. The inflation's in certain areas with this tariff situation. It's not across the whole economy. So there is room for the Fed to cut if the economy got too soft. Again, another great opportunity.
And so far this year, some of these non-U.S. markets, some of these countries like China perhaps, really in the bullseye of these tariff negotiations, outperform the U.S. Do you think that's turning around, changing, tipping?
We think that this may be the beginning of what we saw in the 90s, where you have a global bull market. The U.S. deems it as exceptional, maybe takes maybe a back seat or a paired seat to what's going on. I mean, the stocks in China are very cheap, as well as they are in Europe. And there's a lot of reasons, particularly in Europe, where you have the fiscal spigots being turned back on, given the U.S. withdrawing. We think those markets have legs. We think companies in China that really don't do a lot of business in the U.S. are priced really well here. So I would suggest to investors, be global in your approach. It's great for diversification anyway, but there's a lot of great support for equities, not just in the U.S.
James, how are you pricing March payrolls on Friday? Because if jobs go and unemployment rises, whether it's because of Doge cuts or the cycle, then consumer confidence is going to go as well. And that could lead to a precipitous decline in the stock market. Yes, it's a worst case scenario, but the consumer is not in good shape at the moment and could be in worse shape if tariffs are inflationary.
Yeah, we have to watch out for that. I think that's a good point, Sri. We do want to not be Pollyannish and look at it and say, oh gosh, there's no way we could run into trouble. And the jobs market is an important part of the global economy and the U.S. economy for sure, as is consumer confidence. And some of those numbers, they've been sloppy, they've been a bit weak, and then you've seen inflation maybe a little too high. And so, that is something I think as investors we have to watch very carefully. But keep in mind, a great environment for equities is one where the economy is not growing too fast and not growing too slow, the old Goldilocks. And that's kind of where we are, and that's what the Fed and the U.S. really said in their last meeting. And so what you're going to get is some prints that are a little shy of what people expect, but hopefully not too much, but we'll keep an eye on that. And you'll get some prints on inflation, maybe a little too high once in a while. That's sort of the nature of a Goldilocks economy, and that's what bull markets love.
James, when are the animal spirits going to start roaring? Because they've been noticeably silent, haven't they? We thought that they would be, but they haven't. And when are we going to see the M&A boom that the bulls were hanging their hats on? Is that only really going to come in the second half of the year with tax cuts?
Yeah, that was the excitement about the first week of January. So that animal spirits really kind of went into the doghouse. And we think, frankly, most of this tariff stuff is Q1, maybe a little bit of Q2. But I think what we really need to see is the thing that we subscribe to, that what drives the stock market. Earnings. When earnings in the second quarter meet or beat expectations, we think animal spirits are going to come back in a roaring, particularly when you see, the investor intelligence polls and the bearishness that's out there is really at the extremes of what we saw at the bottom of the bear market in 2022. So, you've got all the right elements. What we need is some good news and more certainty. I think that's coming for investors, coming to save us in the second quarter, this quarter we're in.
James, we've got about 30 seconds. in this global bull market, as you call it, give us your top picks in terms of market, sector, and perhaps a name.
Yeah, and that changes with this policy changes, but, we can stay pretty secure that investors, this is still an AI tech-led business cycle. Let's not forget that. And now you've got these companies at a discount. So technology is high on our list, telecom, financials for sure. Can't wait to see those earnings next week. Utility stocks, I think, because we don't have enough energy to power all this stuff we're doing with crypto and EVs. And then you can go into some of those companies like Pharma that's semi-immune, and we would list companies like JP Morgan. We would list companies like HSBC. Let's go back to Europe with that one. And in technology, across the board, NVIDIA is cheap here.
Right.
Apple, even though they're going to have to work around the cost structures of tariffs.
Fortress balance sheets, quality management, right out the cycle. James, got it. Thank you very much indeed for joining us with that commentary. James Demert there from Main Street Research. My thanks to Sherry Kang as well. Japanese markets will be hitting the lunch break in a few minutes. We'll recap the morning action when we return.
CNBC. Live ambitiously.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined. This industry is going through its renaissance.
How big a game changer is this?
Let's go.
Welcome back to Straight Signs. We have Japanese markets just going into their lunch break, and certainly we are seeing a sell down today. If you look at the Nikkei 225, 3% lower, but a couple of things. We are well off those session lows because the Nikkei opened about 4% lower. We are also seeing elevated volatility if you look at the Nikkei volatility index. However, again, nowhere near the levels we saw last year during that yen carry trade unwind episode in early August as well. In terms of the sectors that are performing the worst today, it is the financials, so the mega banks, the insurers, and so forth. And this is off the back of a couple of things. We did see a big drop in in JGB yields. That benchmark 10-year yield at the get-go at least was down by about 13 basis points. Also, there were concerns as well about valuations because we did see that banking stocks this year have been overperformers against the broader benchmark as well. Also concerns around growth and also what the outlook is for central banks like the US and Japan as well. Other sectors that are seeing significant sell down, transport, and we will get those auto tariffs, that 25% on all vehicles that are not made in the US. That's set to come into effect in about an hour and a half, as well as the electronics index as well, which is a key export market for Japan. Some of the sectors that are showing some resilience today, it seems to be some of those domestic-facing industries. So I'm talking about retail as well as land transport. Also, the pharmaceutical sector is higher by about 0.6%, keeping in mind that off the back of this reciprocal tariff announcement, there are some carve-outs. Pharma as well as chips are some of those carve-outs, although it is worth noting as well that in terms of what we heard from the US president, that there could be those sector-based tariffs to come as well. Now, we have heard some comments coming through by the Japanese trade minister about 10 minutes ago. He said, this is Yoji Muto, he said that he spoke with his US counterpart today, although worth bearing in mind that that online meeting actually took place before the tariff announcement happened. He said that he expressed to Howard Lutnick that any kind of tariffs or the tariff regime that's to be expected is extremely regrettable. He asked about whether or not there are questions around whether these US measures comply with WTO rules. Also reiterating what we heard from the Prime Minister Ishiba as well, saying that they will consider all options available to them as well. And also just wanting to note the moves in the currency, because we have seen significant strengthening in the Japanese yen as well, 147.6. You've got some analysts saying that this is a haven bid, even though, of course, we know that tariffs will be damaging to export-reliant economies like Japan. Sri.
Lynn, thank you very much indeed for that. And do stay with me. Kai Okamura is with us now, MD Portfolio Manager at Neuberger Berman. Thank you very much for joining us, Kai. Trade Minister Muto, as Lynn has been reporting, is seeking tariff exemptions. This is an ongoing dialogue. Do you think Japan will be successful in this regard? Because this is a factor that no doubt the Japanese financial markets are watching very closely.
Well, I think that the Japanese government wants to basically bring the U.S. to the negotiating table to see how much these tariffs can be wound down. Our base view is that for some of these tariffs, especially those related to, like, say, the autos and the auto components, we think that there can be an off-ramp down the line. And this is with respect to things from the Japan side. There are unique features of regulations or red tape that has protected the Japanese market vis-a-vis the rest of the world, and hence perhaps the Japanese government might make some concessions on that front, albeit for the time being the Japanese government does need to show some form of strength versus the U.S., just because we do anticipate that there will be upper house elections later this year, and therefore there needs to be sort of that show for the time being.
Kai, tactically for patient capital, longer-term investors, are tariff-related pullbacks a buying opportunity, or should we tactically underweight the sectors that are most at risk, like car makers, as you mentioned, and the chip stocks?
Yep. So going into this event today, we have been positioning ourselves, and we have been rotating out of these sort of global exporter names and into more domestic-related names, which Lynn was alluding to earlier, and this has worked quite well for us. But, over the mid to long term, what we do think is that an event like this, where we are starting to see an unwind of the globalization trend, We think that basically means that more manufacturing will likely have to be localized in the end markets, and the companies that are able to do so have already done that, but will probably continue to go down that path. And therefore, those companies that have been sold off heavily in this environment, those are the exporters, the automakers, and of course there are other companies out there in the industrial space also as well, are probably now starting to look a little bit more attractive from a valuation standpoint.
Kay, in terms of these negotiations with the US, what are the leverage points here? Because when we think back to that first summit between Ishiba and Trump, they were talking about that increasing investment. We heard about SoftBank, for example. What more can they do to try and convince the US to provide exemptions or carve-outs here?
Yeah, well, I think it's important to note that Prime Minister Ishiba was one of the first foreign dignitaries that went to the U.S. and, of course, came to the Oval Office and announced a couple of major investments by Japanese companies. And I think this will continue to be the case. And the Trump administration will probably warmly welcome that. Now, I think it's also important, and this is a little bit outside my own expertise, but Japan does play a very important role from a geopolitical standpoint with respect to its presence in Asia, but also its strategic geopolitical and military alliance with the U.S. and Europe. And considering that Japan is such a friend to those economies and markets, we do think that those factors will weigh on the decision-making on some of these tariff considerations down the line. But for the time being, obviously, President Donald Trump does want to show some force here to the rest of the world, especially to his constituents in the U.S., and therefore has made this announcement earlier today.
I also want to get your take on the earnings impact for Japan Inc., given this 24% reciprocal tariff. We know that a lot of Japanese corporates do have that cash on the sidelines, but are they potentially, particularly the exporters, staring down the barrel of some sort of a profit squeeze here going forward? And how much as well does the appreciation of the Japanese yen play into that?
Yeah, that's a very good question. And I think this sort of is linked to the market reaction that we have been seeing today. First of all, it's important to keep in mind that when we take all of these tariff considerations into perspective, there's still a lot of uncertainties, but one range that investors and analysts are looking at is about a 5 to 10% hit on forward earnings in terms of the operating profit. Now, the latest figures that we've been hearing is that this impact from the additional tariffs could be around, say, 8-9%. So it is within the market expectations. And that is why, in our view, the market has reacted negatively, albeit it hasn't been as bad as what we'd seen in August of last year. It is also important to keep in mind, though, that the companies that will be hardest hit will be those that do not have manufacturing localized in the United States. And this goes back to the types of companies that we look for, which are exactly those companies that are doing that, localizing manufacturing, localizing production, so that they can meet better the end demand and also reduce the mismatch between the revenue and the cost base, and that reduces the currency volatility, but obviously also the tariff impact that we're seeing today. So increasingly, there will be a focus on those better quality companies, we think.
Kai, with regard to your point earlier about the challenging geopolitical setup in our region, do we need to own defense sector stocks then? And furthermore, and elsewhere, what are the implications then for the Bank of Japan at this juncture?
So to answer your first part of the question in terms of the defense-related names, we do think that it is important to have some exposure to that. But really, as fundamental stock pickers, the main reason has to do with the fact that in Japan, we have several names, and these are names that we hold in our portfolio, such as, say, Mitsubishi Heavy Industries, that are going to be beneficiaries if and when the Japanese government decides to raise the defense budget. But also keep in mind that these companies are trading at attractive valuations compared to, say, Rheinmetals in Europe, which is trading at much loftier valuations. And therefore, we think that the potential on the top line, but also the discounted valuation and also additional shareholder returns prospects are looking very attractive for a company like MHI. Also, I'll just add on the BOJ front, it is important to keep in mind that, given the uncertainties that we're seeing in the global macro environment, we are expecting that potentially the interest rate hike that was initially expected for May could be pushed back into, say, July, possibly even later. That's one of the reasons why we're seeing a bit of a pullback in the banks today. But we think that the Bank of Japan's plans to normalize interest rates will continue to be the case. So this is actually going to be a good buying opportunity for us.
Kai, the Warren Buffett trade and the interest that we've seen in the Showa trading companies, does that still have legs to it?
Yeah, we think so. I mean, keep in mind that, a lot of these companies, one of the main reasons why Warren Buffett bought into these, and it's written in clear ink in the annual letter, is better capital deployment. And this is actually a very important part of many Japanese companies and the re-rating story that we're seeing play out. So for the trading companies, of course, but I think it's interesting that the other companies in this market are also seeing better capital deployment, and this is going to continue to accelerate as more and more investors are knocking on the doors of these managements to improve payouts, improve capital returns, and this pressure is going to continue to increase because keep in mind, the Tokyo Stock Exchange is now putting in much higher rules and regulations to get these companies to have better liquidity, better market caps, higher market caps, and we think that this will bode well for Japan's re-rating story going forward.
Interesting. So investor activism being one of the offsets to a difficult external situation fraught with risks at the moment. Kai, thank you very much indeed for walking us through the opportunities in the Japanese market. My thanks to Lynn as well. We will take a quick break. Back in 2 minutes.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, The Edge, only on CNBC.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, and I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Right, so let's take another look at US equity futures, and they are still projecting some heavy losses for the major averages. Our CNBC colleague Steve Leisman has been in touch and telling us it is factually incorrect to say the Trump administration set the new tariffs at half the level other countries charge the United States, because other countries do not charge those tariffs. Average European tariffs on US goods are closer to 4%, not 39%. Singapore and Switzerland charge very few tariffs. Most countries have tariff levels in the mid-single digits. The United States, as a consequence, now likely has the highest tariffs in the developed world. So here you have an issue then with the mathematics of all this, and it really highlights how potentially disproportionate the tariff regime is from the US and the broad impact that it could have, especially in some of the more vulnerable economically countries in this region. Vietnam, speaking of which, has been severely targeted by the tariffs. The market opening sharply lower. JP Yong is back with us, and the currency market as an expression of this, the dong also at record lows, JP.
Absolutely. Whether you look at the FX space or the equity space, it is not a good morning in Vietnam today, Sri. And about 30 minutes into the trade, we're starting to see the VNI index falling by about 5.4%. They are undoubtedly the worst performer so far in this region. That's also because among the big 6 ASEAN economies, they are the ones that got the highest tariffs actually from the Trump administration. About 46% actually. This also on the back of the fact that Vietnam happens to have one of the 5 biggest trade surpluses of the U.S., above $123 billion, at least by latest calculations of the U.S. Trade Representative Office. Now, it's important to note this also, that Vietnam itself, about 30% of their overall exports actually go to the United States, and it is a bigger percentage of their export pie as compared to other countries in Southeast Asia, which means that if these tariffs do impact exports from this very trade-reliant nation, you will see it possibly have a bigger impact on the overall economy of Vietnam. And it's one of the reasons why we're seeing the Vietnamese dong looking quite limp in today's session. In fact, a record limpness or record weakness for the Vietnamese dong now at just about 25,740 against the greenback. You take a look at the VNI index, which you mentioned has fallen by about 5.3%. Also, coming after the Van Eck Vietnam ETF fell by a whopping 10% overnight. You will see that some of the major losers out there happen to be in the banking space. Export-Import Bank, again, which might put them in the crosshairs of these tariffs also. They have actually fallen by about 3% in today's session. And Vingroup, the parent company of VinFast, which, by the way, is setting up a factory in North Carolina to produce EVs in the United States, they're seeing their shares actually falling by just about 5.5% so far, mirroring the overall decline for the VNI index. As we mentioned, Sri, it is not a good morning in Vietnam today.
Which is ironic as well, isn't it? And you and I were talking about this earlier on this morning. VinFast has not exactly been sitting still. It's been deploying and it's been investing in manufacturing in the heart of North America and the United States, to say the least. Mm-hmm. And yet, Vietnam has been hit with these punitive tariffs, if you will. So the issue is they're not really in a position to retaliate. Can they negotiate concessions, though?
I think that's what Vietnam is trying to do. And if you recall, Sri, about 2 weeks ago, the Vietnam trade minister actually went to the U.S. to speak with the folks at the Trade Representative's Office to try and negotiate. But that's a lot. That's a huge amount to actually try to recoup. One of the easiest places they can actually look at to try and at least rebalance that trade is perhaps increase LNG imports from the U.S., because this is something that Vietnam is in severe need of. There is talk of some of the gas fields in offshore Vietnam perhaps being more difficult or challenging to explore. So thus LNG imports from the United States might be one of the best ways to actually remedy it. But again, $123 billion in terms of a total trade surplus against the U.S., 30% of their exports going to the United States market. And that's the calculation of the GSO in Vietnam. So this will have a huge impact on them. Sooner rather than later, they're going to have to step up and find ways to at least address this, or else these tariffs might continue to have a prolonged impact on Vietnam. Just to also add there, the VNI index before today was the best performing market in Southeast Asia year to date. And in the course of 1 hour, they have now wiped out all those year to date gains, are now in the red alongside the likes of the KLCI in Malaysia and the Thai set, just to name a couple. And again, just painting a very, very challenging start to the 2025 for these markets in Southeast Asia.
And of course, you and I discussed this as well. The upshot of all of this is that water does find a way, trade will find a way, and I wonder if Vietnam and others are going to be seeking new partnerships, new bilaterals, new multilaterals, expanded CPTPP or otherwise. That's really, that reorientation is what we have to look for.
I think so, but again, yes, trade will find a way to flow out, but again, the flows could be slow because, you know, if you're going from flows throughout certain channels and now smaller channels, suddenly you'll see the velocity of those flows start to slow down. And let's do a comparison here. In Indonesia's case, about 10.5% of their exports go to the U.S. So that might be a little bit easier for them to diversify. For Vietnam, it's 30%. That's going to be a lot more challenging for them to try and diversify from that. And of course, this also will play into that. And that's maybe also why they might feel a more pressing need to renegotiate things with the United States.
Added urgency for closer ASEAN integration as well, perhaps. JP, excellent. Thank you very much indeed for that. Amid this risk-off sentiment, gold is hitting fresh all-time highs. This is where we stand for the precious metal. 3,145 is where we stand, broadly speaking. Let's bring in Jörg Kiener now, Managing Director and CIO at Swiss Asia Capital, Singapore. Jörg, great to have you on the program. Is gold going higher, and what's your next target?
It's a very good question, but I think we've got to start looking at the underlying fundamentals which we have globally. We started with currency wars, now trade wars, real wars, conflicts, inflationary environment globally. That means that your financial assets are actually in trouble because your credit margins are increasing, your risk of trade is increasing. And so gold is the perfect shelter in that environment from an economic point of view. It's as well from a geopolitical point of view, probably the perfect way.
Dollarization and diversification going to remain a big driver of gold to the upside. And let's bring in China here. Jörg, what are the demand signals from China telling you, especially from a central bank buying perspective?
So de-dollarization will continue because as you're going to do more bilateral trade, you need less dollars. So I think that's a fact. That's already positive gold from a Chinese point of view. We started the accumulation of gold a long time ago. It started with the institutional market, with the 1 kg bars, then the retail market, and I think lately now we enticed the insurance companies to come back into the gold market to fill up their portfolios with gold. So China will be a very big buyer. And if you look at international trade, the way China and the BRICS are looking at it, they're looking at a type of gold-backed trade settlement structure for trade, not as a payment structure yet. And that means everybody is actually increasing their gold levels. Now, if you look at the global environment about gold holdings, if I look at global portfolios or US portfolios in general, I think the percentage ownership is about 0.3%. Last time we've been in stagflation, I think the number was somewhere between 4 and 10, depending on country. So there's a long way to go as well from financial point of view to accumulate the metal.
If there's more momentum associated with the gold trade, then as investors, if we are looking to diversify and de-risk our portfolios, do we need to buy the physical metal? Do we need to buy the SPDR ETF or the gold miners?
Look, I think as a safety point of view, I think we keep telling everybody you have to have physical gold in position, not through an ETF. You own physical gold, you take it out of the financial environment which is able to lend and borrow and short. You take position because then you are outside the financial system. If you want to have leverage on that, I think the precious metal miners are a bargain. They're still 50, 60, 80% below their all-time highs, despite gold has doubled since the old highs. So the profit margins in the sector are exploding. The free cash flow is somewhere between 15 and 20%. It's probably one of the sectors right now which has margin expansion. And I think that's going to entice a lot of money into the sector.
You mentioned the geopolitics, which are troubling, to say the least, Jörg, wherever you look in Europe, and the threat of especially on the eastern flank of Europe from Russia, and the optics of the Ukraine war are not looking good. And then in this part of the world, there is the military exercise, and increasingly this China in the Taiwan Strait, and an increasingly militarily assertive China. It's no coincidence, is it, that the Polish central bank last year was one of the biggest buyers of gold. Within the European context, do you see that continuing?
I think the de-dollarization is already happening. Yes. So if you change your dollar reserves with gold reserves, actually, you see that all over the world happening. It's a train in motion and accelerating. Now, if you look at the global picture, we started with currency wars. Now we are at trade wars, and I think we're escalating to military wars because logistics, transportation, everything which is included in that is actually happening. It's actually stagflationary, if not inflationary. The bond market already tells you actually we have a real problem. If you look at the longer end, you have backwardation in the metals, which tells you have shortages.
Yes.
You see large movements out of London in order to cover the shorts in the United States. So we have now an environment where you're deleveraging in the metal space, you're taking possession out, and therefore prices go up. So if you can continue to do the same, it's actually forcing prices higher, it's forcing more people in the derivative market to close positions.
There is a narrative that contends that in the second half we could see a turnaround in sentiment if there are tax cuts, if the entire tariff narrative starts to wash out and it's replaced by a more positive catalyst like tax cuts and maybe the animal spirits come back and deregulation, etc. If that happens and if we do see the dollar rise again, is that going to undermine the case for gold?
Look, I don't think it will undermine the case for gold for probably another 3 years. I think the cycle has a long way to go. Even if you would change policies tomorrow, even if interest rates are coming down in the next 3 months to support the weakening economy down to zero, the long end tells you that we have actually inflation backed into the cake. And these inflation numbers will a long time actually to be coming out, because as you onshore, you have a capital investment cycle. It's inflationary. And so that's baked into the cake. In addition, your trade barriers mean you're going to have higher cost. So all that is like a snake which eats too much. And it has to go through the whole snake to come out. So you have probably a couple of years at least for this trade to pan out.
Interesting. If I can just put you on the spot, we got 30 seconds left, Jörg. Where is gold going to end the year? Closer to 4,000 maybe?
Look, I don't know where we're going to be end of the year. I think I look at the target in 28, somewhere between $8,000 and $12,000. And then we're going to see how we're going to stabilize if policies change. If policies change before then maybe we have to take our targets down, but I can't see that we're going to reverse policies for the time being.
Jörg, it's always a pleasure talking to you. Thank you very much indeed for joining us. Jörg Kiener there, Swiss Asia Capital, Singapore. Tariff jitters ripple across Asia. We're tracking the reaction flowing through. India's market set to open. Hour more market action coming up in these volatile markets. Stay with us.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
My side hustle brings in over 6 figures.
About $10,000 a month.
Over $500,000 since its beginning.
Find your hustle with CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
There's a tremendous amount of opportunity out there.
And help you choose the one that fits your life, schedule, and goals.
Find your own path to building multiple income streams.
Go to CNBCMakeIt.com/side hustle to register now.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
Welcome back. You're watching the final hour of Street Signs. I'm Sri Jagaraja at the SGX. Your headlines at this hour. US President Donald Trump ratchets up Tariff tensions unveiling sweeping duties for all US imports and higher tariffs on many of America's trade partners.
We will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating.
Asian markets are on the back foot following the president's announcements. Officials from China to Japan to South Korea pledging steps to mitigate the negative impact of the levies. Beijing says it will take countermeasures to safeguard its rights and interests following the heavy duties. And the rupee weakens amid a broad risk-off sentiment after the US imposes 26% tariffs on India. The Trump administration says they're based on tariff and non-tariff barriers, including currency manipulation.